Welcome to meeting number 14 of the House of Commons Standing Committee on Finance. Pursuant to the motion adopted in committee on January 12, 2022, the committee is meeting to study the inflation in the current Canadian economy. Today's meeting is taking place in a hybrid format pursuant to the House Order of November 25th, 2021. Members are attending in person in the room and remotely using the Zoom application. The proceedings will be made available via the House of Commons website. So you are aware the webcast will always show the person speaking rather than the entirety of the committee. Today's meeting is also taking place in webinar format. Webinars are for public committee meetings and are available only to members, their staff, and witnesses. Members enter immediately as active participants. All functionalities for active participants remain the same. Staff will be non-active participants and can therefore only view the meetings in gallery view. I'd like to take this opportunity to remind all participants that this meeting, during this meeting, that screenshots or taking photos of your screen is not permitted. Given the ongoing pandemic situation and in light of the recommendation from the health authorities, as well as directive of the Board of Internal Economy on October 19th, 2022, to remain healthy and safe, all those attending the meeting in person are to maintain a 2-meter physical distancing, must wear a non-medical mask when circulating in the room, and it is highly recommended that the mask be worn at all times, including when seated, must maintain proper hygiene by using the provided hand sanitizer at the room entrance. As the chair, I will be enforcing these measures for the duration of the meeting, and I thank the members in advance for their cooperation. And to ensure an orderly meeting, I'd like to outline a few rules to follow. Members and witnesses may speak in the official language of their choice. Interpretation services are available for this meeting. You have the choice at the bottom of your screen of either floor, English, or French. If interpretation is lost, please immediately let me know so that I can ensure interpretation is properly restored before resuming the proceedings. The raise hand feature at the bottom of the screen can be used anytime if you wish to speak or alert the chair. For members participating in person, proceed as you usually would when the whole committee is meeting in person in a committee room. Keep in mind the Board of Internal Economy's guidelines for mask use and health protocols. Before speaking, please wait until I recognize you by name. If you are on the video conference, please click on the microphone icon to unmute yourself. Those in the room, your microphone will be controlled as normal by the proceedings and verification officer. When speaking, please speak slowly and clearly. When you're not speaking, your mic should be on mute. A reminder that all comments by members and witnesses should be addressed through the chair. With regard to speaking lists, the committee clerk and I will do the best that we can to maintain a consolidated order of speaking for all members, whether they are participating virtually or in person. The committee agreed that during these hearings, the chair enforces the rule that the response by a witness to a question take no longer than the time taken to ask the question. That being said, I request that members and witnesses mutually treat each other with respect and decorum. If you think the witness has gone beyond the time, it is the member's prerogative to interrupt or ask the next question, and to be mindful of other members' time allocation during the meeting. I also request that members not go much over their allotted question time. Though we will not interrupt during a member's allotted time, I'd like to keep you informed that our clerk has 2 clocks to time our members and witnesses. This meeting is scheduled for a longer duration in consideration of the fact that our witnesses may not get an opportunity to leave their virtual setup at around the halfway duration mark of the meeting. I will suspend the meeting for a 5-minute health break. I'd like now to take this opportunity to welcome our witnesses. We have a number of them with us today. We have the Front d'Action Populaire Réaménagement Urbain, and we have Véronique Laflamme, organizer and spokesperson. Welcome. And we have from Hayter Moranis Bulletin, Murtaza Hayter, professor, and Stephen Moranis, real estate strategist and columnist. And from the Macdonald Laurier Institute, we have Philip Cross, senior fellow. From the National Right to Housing Network, we have Sahar Raza, project manager. And from Scotiabank, we have Jean-François Perrault, senior vice president and chief economist. Each organization will have 5 minutes for opening remarks before we move to members' questions. We are going to start in the order that I just ran through our list of witnesses. So from the Front d'Action Populaire Réaménagement Urbain, Véronique Laflamme, for 5 minutes, please. Madame Laflamme.
Hi. Bonjour tout le monde.
Hello, everyone. I will be doing my presentation in French. Thank you for inviting me. We know that rising house costs are an important component of current inflation. We are particularly concerned by renters who are most widely represented among households that are already spending too much of their income on housing. In the last census, before the pandemic, in Canada, 795,000 renter households were spending more than 50% of their income on housing, far from the standard of 30%. In Quebec, 195,000 renters were in this situation. As Frappru is a pan-Quebec group, we represent 140 organizations, and we're defending right to housing. I'm going to talk to you about increased rents in Quebec, knowing that other provinces are facing similar problems. According to data from the CMHC, we see that in the last 10 years, average rents have increased by 31%. 18.7% of these increases were in the last 5 years alone. So the rent increases are incredible. The impact of the shortage of rental units has affected price rents. Vacancy rates have been affected by the pandemic, and this has contributed to this increase. Vacancy rates are plummeting in many areas. In many small cities, outside of big cities where rents were up to now cheaper, we're seeing increasing rents. So Rimouski, Drummondville, Saint-Hyacinthe, Sherbrooke, and more. Apartments that are available are very expensive. One number strikes us. In the last CMHC report, we see that there has been a difference between 46% between an apartment that is rented or an apartment that's available. So those that are available are 46% more expensive. So when people have to move from their apartment, if there's a separation, or when women are fleeing domestic violence, or because the renters are being evicted, they face difficult situations. This particularly affects low and modest income households, the majority of which are renters. The median income of renter households was only $18,000 a year as of the last census. So this is the income of renters who have strong needs for housing. So there's 1.2 million of these across Canada. We also have to be concerned about the middle class that is becoming poorer and can't access housing and will find themselves among those households that spend more than 30% on their income on housing, and we need alternatives. So we need to think first and foremost about people with low-income housing who have no margin and need to turn to food banks in order to make ends meet after paying rent. With inflation and recent rent increases, the situation has degraded, and we'll see statistics worsen in the next census. Ottawa has an important role to play. The government has an important role to play because they can make sure that there are alternatives for those families who currently don't have any. The federal government has played an important part in funding social housing outside of the private market, but withdrawing from long-term funding has left a major gap. With the National Housing Strategy, the federal government has not generated the results that were expected. This strategy rests too much on the private sector and initiatives that are financed by this strategy. they are focused on affordable housing without earmarking funds for social housing as was done in the past. So many homes are still affordable, but are not affordable to families who need housing and have low income. And this has contributed to the increase of rent. So it's not by funding rental construction in the private market that we can contribute to exiting this inflation spiral. This objective can be reached with social and community housing projects and by earmarking sums that are currently planned for affordability and according them to social housing outside of the private market. So according to the Parliamentary Budget Office, there are some funds that are for affordable housing, but we think that they should be funding social housing. Currently, there's a single federal initiative that is dedicated exclusively to public housing. Thank you so much for your attention. And I'd also like to mention that, of course, we are part of the National Network of Rights to Housing, and we haven't spoken about right to housing in this presentation, and my colleague Sahar will talk to you about it after.
Thank you. Merci, Madame Laflamme. And now we're moving to Hayder Moranis Bulletin for 5 minutes.
Thank you, Mr. Chairman, honorable members of the Standing Committee. My name is Stephen Moranis. I'm a former president of the Toronto Real Estate Board and a former director of the Canadian Real Estate Association. I am here today with Dr. Murtaza Hayder, a professor of real estate management at Ryerson University. Together, we write a weekly column for Postmedia available as the Hayder Moranis Bulletin. The column appears weekly in the National Post and occasionally in newspapers across Canada, including the Ottawa Citizen. We are grateful for the opportunity to share our analysis and insights about the determinants of the rapid increase in housing prices since 2000 in Canada. Housing prices have grown even more rapidly during the pandemic. The average housing price in Canada increased from $164,000 in 2000 to $502,000 in 2019. According to the data compiled by the Canadian Real Estate Association, the average housing price reached $567,000 in 2020 and $688,000 in 2021. While several factors have contributed to the rapid escalation of housing prices in Canada, including ultra-low mortgage rates, we believe that the primary cause of rapid house price escalation is the imbalance between demand and supply. In particular, the construction of new housing in Canada has not kept pace with the increase in the demand for housing. The gap between the supply and demand for housing has not emerged overnight. We have traced data back to the early 1970s and found that our rate of construction, normalized by population, has declined considerably over the past 5 decades. To put things in perspective, in the early 70s, Canada was constructing over 10,000 new homes per million population each year. The rate of housing construction declined over the decades and nearly halved to about 5,000 to 6,000 new homes built per million population in the past few years. A temporary increase in housing starts might give a false impression that the housing supply is catching up. However, the housing deficit has accumulated over several decades, and a few thousand additional homes constructed in 1 year are certainly not sufficient to address the gap accumulated over decades. A recent research brief published by a major Canadian bank revealed that if Canada were to have the same housing stock ratio relative to its population as the average for G7 countries, Canada would require an additional 1,800,000 dwellings today. We estimated that if Canada continued to have built housing at the same rate as in the early 70s, over 4 million additional homes would have been built. The predictable increase in housing demand, which is supported by a steady and predictable increase in population, requires a significant increase in the rate of housing construction to meet the housing needs of the growing population and address the housing deficit accumulated over the past few decades. Even at places, especially in some large and urban areas, where housing construction has strived to keep pace with the additional housing demand, the type of housing being built is essentially condominiums or small-sized dwellings that are not ideally suited to house growing families. We would like to use this opportunity to highlight the need to accelerate the supply of new housing in Canada at rates far above the rates observed in the recent past. We recommend streamlining land development approval processes that involve consolidating decision-making under one roof, where all relevant stakeholders from local, provincial, national governments are represented to reduce the approval processes that could take several years in some instances. A national government spending on affordable housing, financial guarantees, and targeted support in regions of especially high demand is a must to improve housing outcomes for all Canadians. The construction of purpose-built rental housing took a nosedive in the early 70s when capital gains tax was first introduced. There is a need to reconsider the taxation regime that might have served as a disincentive for constructing purpose-built rental housing, which is essential for the security of tenure and affordable rents for almost 30% of Canadians who live in rental housing. We have submitted to the Standing Committee our report on the housing challenges published recently by the Macdonald-Laurier Institute. We thank you for the opportunity and are available to answer any questions that you may have. Merci beaucoup.
Well, thank you very much, Mr. Moranis. And now we're going to hear from the Macdonald-Laurier Institute. We've got Mr. Cross with us.
Thank you. Most analysts discuss inflation with an air of precision and certainty. I would like to speak about the uncertainty and the unknown surrounding our understanding and measurement of inflation. In passing, I'll note that I worked at Statistics Canada for 36 years, ending as its chief economic analyst. For several reasons, we don't know what is the current rate of inflation, although it clearly is faster than before the pandemic. This is because, A, the coverage of the CPI is incomplete. For example, used cars are excluded from Canada's CPI, but not the US one, and shortages have raised used car prices substantially during the pandemic. Second, more broadly, the CPI does not attempt to measure the impact of shortages, which are clearly a cost to consumers in terms of choice, convenience, and price. The CPI was designed for an economy characterized by abundance and not shortages. For example, car companies will produce more expensive models due to the chip shortage, but the CPI will miss this shift in production. Thirdly, statistical agencies measure the CPI differently. I just mentioned used cars. Housing, the largest part of the CPI, varies between countries and even within statistical agencies over time. The US and Canada treat housing differently today, and both nations have changed their measure of housing prices since the 1980s. There's no wrong or right in this, but it reflects...
Mr. Cross, I'm going to apologize. Can you just raise your mic a little bit? Raise your mic a little bit. I apologize.
Not at all.
Okay, clerk, is that better for the interpreters now? Okay, thank you. And I apologize for that.
Oh,
yeah, go ahead.
Thank you for the correction. As I was saying, the US and Canada treat housing differently, and both nations have changed their measure of housing prices since the 1980s. There's no right or wrong in this, but it reflects that discretion and judgment is involved. Fourthly, the CPI itself is a limited measure of inflation. For years, the Bank of International Settlements has urged central banks to look at the price of financial assets and not just the CPI, partly because, rather mysteriously, much of the post-2008 stimulus appears mostly in the price of financial assets and not the CPI. So statisticians don't know precisely what inflation is, and neither can economists be sure where it is headed, although it seems likely to stay elevated for some time. Danny Tarullo, former governor of the US Federal Reserve Board, wrote how economists don't have a working model of inflation. While clearly inflation is related to the money supply, defining the latter is difficult, and its relationship to inflation is imprecise and variable. The Phillips curve relating inflation to unemployment has broken down for years, if not decades. Finally, expectations have proven to usually react to and not predict inflation. Although rising expectations today will help reinforce inflationary pressures as workers demand higher wages to compensate for lost purchasing power, making it harder to rein in inflation. Kevin Walsh, also formerly the U.S. Federal Reserve Board, recently wrote in the Wall Street Journal that it is misleading to dismiss inflation as just supply chain bottlenecks, saying that consumer prices are higher because prices are rising at the points of production, assembly, and transportation describes the manifestation of inflation, but not its source, which is excessive fiscal and monetary stimulus. Monetary stimulus actually damages aggregate supply by discouraging investment. So anyone who states they know precisely what inflation is and where it is heading is exaggerating. Unfortunately, economists routinely exaggerate or fail to acknowledge the limitations of their understanding of how the economy functions. This is especially true when it comes to price inflation. I look forward to your questions. Thank you.
Well, thank you, Mr. Cross. We're now moving to the National Right to Housing Network, and Ms. Raza for 5 minutes. Welcome.
Thank you, and good afternoon, Mr. Chair and members of the Finance Committee. My name is Sahar Raza. I'm the project manager of the National Right to Housing Network, and that's a network of over 350 organizations and experts from across the housing and homelessness sector, including FREPRU, who we just heard from earlier today. And we are all dedicated to seeing the meaningful implementation of the right to adequate housing, which Canada has committed to in both domestic and international law. And in fact, it was this very committee that adopted key amendments to the National Housing Strategy Act in 2019 in order to recognize adequate housing as a fundamental human right. And so it really is an honor to be here today to discuss how we can turn that transformational human rights commitment into practical solutions that can actually address this housing crisis. So as we know, financialization is a major driver of the housing crisis because housing is being treated as a profit-making commodity rather than a social good and human right. And while increasing supply is certainly important, particularly in rural, remote, and northern areas, supply alone will not get us out of this housing crisis because we are losing affordable housing stock at a faster rate than we can possibly produce it. And that means that we need to revamp ineffective housing programs and policies to better utilize our current housing supply. We need to close tax loopholes and increase investments in non-market housing, for which our stock is about half of other OECD and comparable countries. So for starters, we know that large corporate landlords like real estate investment trusts are huge drivers of financialization. They're known for buying up affordable housing stock, rent evicting low and middle income tenants, and then jacking up the home prices, which makes housing even more unaffordable. And yet in a recent study by Acorn Canada, it was estimated that just over the last 10 years, these real estate investment trusts have benefited from more than $1.2 billion in tax exemptions compared to if we just tax them like a normal corporation. And if we look to international human rights guidelines, they actually tell us that we need to close these types of real estate loopholes and then reinvest that tax money into our national housing strategy. And so there's a huge opportunity here to simply use the tax money being left on the table to improve our housing supply, repair of current homes, and programs for people in greatest housing need. And so along that vein, there's also an opportunity here to increase taxes on all private investments or investors who own multiple properties. Because as we've seen, existing homeowners and investors are seeing major equity gains, which means they're easily able to take that equity alongside low interest rates and buy even more investment properties, or else pass that wealth on to their children, which makes it even more difficult for renters and first-time homebuyers to break into the market. And we're even seeing disadvantaged groups experience that disadvantage multiply generationally. And so these are highly inequitable outcomes which violate the right to housing, but again, can be easily addressed through regulatory and tax measures like an incremental tax for each additional property beyond your primary residence, or through national speculation and vacancy taxes, all to disincentivize profit hoarding in the housing market. And again, this money can be reinvested into our national housing strategy to improve supply and so on. However, I will say now that our existing national housing strategy requires a major rights-based revamp because its capital funds, like the Rental Construction Financing Initiative, which, by the way, holds the biggest price tag of all programs in the strategy, has extremely lenient and short-term affordability guidelines, which simply do not target low-income households. And just to exemplify that, many NHS-funded projects are unaffordable to up to 90% of renters. So this means that we're actually using government funds to drive the housing crisis instead of addressing the housing crisis. And so this could easily be reformed if we just think of some new criteria for these capital funds. So for example, we could require that a certain percentage of units be permanently affordable at rent geared to income for every new development. We can implement anti-displacement or anti-eviction regulations. We can implement rent controls, and we can dedicate more funds from these capital initiatives to non-market housing. And so I will end it here, but these are just a few of the practical human rights-based solutions that we can implement today to ensure that every person in Canada has access to adequate and affordable housing, which I think is the goal that we all share at this table. So thank you for your time, and I very much look forward to your questions.
Well, thank you, Ms. Raza. And now we're moving to our last witness, but it's Scotiabank and Monsieur Perreault for up to 5 minutes.
Thank you. And I've unmuted myself. Perfect. Good. Hello, and let me first start by thanking members of the committee for the opportunity to share my views with you. Though I'm now the chief economist at Scotiabank, I've spent the entirety of my career before that working in the policy world. I have a deep respect for the role of public policy and the institutions of democracy in our country. And with that, I hope that my perspective can be of some use to you as you consider the inflation and housing situation. There's no doubt in my mind that inflation and housing affordability are key challenges to navigate for policymakers. The diagnosis on housing-related challenges are a bit more straightforward to assess, given that much of the issue is made in Canada. So there's no doubt that the pandemic and associated policy responses have contributed to the strength of the housing market. Low interest rates, generous income support programs, and the desire for households to move away from some cities or to look for larger homes in light of the pandemic have all clearly contributed to some of the strength we've seen. That being said, the overwhelming cause of the deterioration in affordability lies in a structural imbalance between the number of residents versus the number of dwellings to house them. The very rapid pace of population growth observed since 2015 has not been matched by a commensurate increase in the supply of homes, resulting in a decline in the number of homes per capita since 2016. Canada, as has been noted by another speaker, has the fewest number of homes per capita of any G7 country. It's an admittedly simplistic way to look at things, but it would take nearly 2 million additional dwellings in Canada for us to have the same number of homes as our G7 peers. The solutions to this challenge are clearly multifaceted and cut across all levels of government. The federal government sets immigration targets and macroprudential policy governing housing finance, but provinces and municipalities ultimately control the pace at which supply is built. In our view, we will not reverse course on affordability unless housing supply becomes much more responsive to demographic pressures. We take much comfort from the fact that there seems to be a broad understanding of this reality in the public sector, and we're hopeful that policies will be put in place to increase the elasticity of supply. But the hard reality is that even in the best of scenarios, it's likely to take years before there's a better alignment between the population's needs and what are available to them. This means upward pressure is likely to remain on the housing market, which will add to inflation pressures in Canada. There is no question that inflation is well outside the Bank of Canada's inflation control range. The question for inflation is rather what is likely going to happen with it from here. Our understanding of inflation has changed over the year. For a time last year, the rise in inflation was largely viewed as temporary, as we thought, along with other central bankers around the world, that a major driver of the inflation surge was supply bottlenecks. Simply put, demand for goods had surged, and that was straining the global economy's ability to meet that supply, either because COVID impacted key producers, transportation bottlenecks, or a range of other factors. Based on the accumulation of evidence since these assessments were made, it appears to be pretty clear that global production and transportation systems have responded aggressively to the strength of demand, and that demand is a more powerful driver of inflation than we'd earlier thought. In our view, that means that inflation pressures are likely to be more persistent. This is a global phenomenon. Canadian policies have likely had a little influence on that broad outcome. That, of course, is of little comfort to firms and households that are managing the impact of inflation on their lives. There is, nevertheless, a Canadian angle to inflation. The record number of job vacancies will put upward sustained pressure on wages in the year to come. That will keep inflation pressures up. The cost of new construction will continue to rise owing to these capacity pressures in the construction sector, but also because the cost of raw materials has increased dramatically owing to the global factors noted above. And perhaps most importantly, it's very clear that Canadian firms and households believe higher inflation will last and remain uncomfortably high given the Bank of Canada's inflation control mandate. The most recent survey by the Canadian Federation of Independent Business, for example, finds that small and medium-sized enterprises now believe they need to raise prices by 4.6% over the next 12 months in their December survey. Recent readings of this survey are the highest by very far in relation to history. Inflation control is a pressing challenge that should see the Bank of Canada tighten rates substantially this year. The simple reality is that its policy rate, his real policy rate, has become more stimulative as 2021 has progressed, even if its actual policy rate has remained unchanged. This is because inflation and inflation expectations rose as policy rates remained stable. Those settings need to change. With those comments, thank you for allowing me to these brief opening remarks, and I look forward to the discussion and to your questions. Thank you.
Thank you, Monsieur Perreault, and thank you to our witnesses for joining us for your opening remarks, statements. And now we're moving to questions from members. In our first round, each party has 6 minutes to have their questions answered, and we're starting with the Conservatives and Mr. Poilievre for 6 minutes.
Thank you, Chair, and my questions will be directed at former Statistics Canada Chief Economic Analyst Philip Cross. Mr. Cross, when Mr. Trudeau took office, you could buy the typical house for $434,000, according to the Canadian Real Estate Association. Now it's $811,000. That's an 85% housing inflation in just 6 years. Last year, home inflation hit 25%, which Real Estate Association chief economist called, quote, the biggest gain of all time, end quote. Do you believe that the $400 billion of newly created cash that the government, through the central bank, pumped into the financial and mortgage markets, and the resulting negative real interest rates on variable rate mortgages had an impact on the record-smashing housing inflation Canada witnessed last year? Oh, Mr. Cross,
you're on mute.
Sorry, yeah, I forgot to unmute. I don't think there's any question it had a contributing and a large role. I think part of the problem, Mr. Perreault put his finger on it, is that in this country, the federal government operates on a lot of the levers that control housing demand, notably through interest rates and immigration quotas, and yet the supply of housing is controlled at the provincial and local level. And we've had an enormous amount of stimulus go into housing. We've seen a big shift in consumer spending from services to goods. And obviously, that's created a lot of inflationary pressures.
Right, and as Mr. Perreault did say, housing inflation is homegrown. Bloomberg reports Canada has the second most inflated housing market in the world. Vancouver is the second most unaffordable, and Toronto the fifth most unaffordable market on planet Earth, according to Demographia. Obviously, this is bizarre because Canada has among the most abundant supply of land on planet Earth. So it's strange that we would have such difficulty housing our people, or that we would be experiencing such inordinate house price inflation. Can you blame the inflation in land prices, Mr. Cross, on supply chain bottlenecks?
Well, certainly going back to that's particularly a problem at the local level. It seems to be especially a problem in areas like Toronto and Vancouver, where land is constrained or contained to certain areas, and the local governments have been reluctant to increase supply. But we've also seen demand increase sharply.
Right.
So it's not just a matter of supply. We've seen demand increase sharply. This goes back to 2015 when the Bank of Canada first lowered interest rates. If you look at graphs of housing prices in Vancouver and Toronto, they weren't doing anything exceptional before 2015. The minute we cut interest rates in 2015 and the oil boom stopped in Alberta and people immigrants stopped coming to Canada, going through Toronto and Vancouver, and then on to Calgary, they just stuck into Toronto and Vancouver. And we saw prices in those areas start to explode in 2015. And it's just continued ever since.
Right now, you can get a variable rate mortgage for 1.6%, which is 3 points below inflation. In other words, we have negative real rates. We're paying people to borrow big sums at variable rates with very low down payments. Is this contributing to inflating the housing prices?
Again, I don't think there's any question. I mean, there's been an attempt to tighten those rules, to increase down payments, to pass stress tests. Can you afford your mortgage at higher interest rates? But obviously that's been over. People have been able to find other sources of finance, particularly the bank of mom and dad, that has easily circumvented these attempted regulations.
Right. Banking rules, mortgage insurance, monetary policy, money laundering are all federal. So is housing inflation here and now under this government. That's what some people are calling it, just inflation. I won't ask you to comment on that. But do you believe that the fact that we have discouraged energy development in Canada and also flooded the economy with extra cash may have devalued what would otherwise have been a stronger Canadian exchange rate and therefore reduced what would have been stronger purchasing power for internationally priced goods?
That's an interesting point. I mean, there was a lot of talk about Canada being a petrocurrency, particularly during the run-up of the dollar to parity in the 2000s. Over the last year, we've seen oil prices recover substantially from record lows to $85, $86. And yet you look at the dollar today and it's sunk below 79 cents again. So clearly the exchange rate is not demonstrated the linkage to commodity prices that we've seen in the past.
You used to be that point. You used to be able to get. It used to be that you'd have the Canadian dollar to the U.S. would be about a penny to the dollar of the oil price. So if oil was at $100, you'd have parity. If oil was at $90, Canada's dollar would be at 90 cents. But that linkage has been broken, and we're no longer increasing the value of our dollar as oil prices go up. Which means, of course, when we buy internationally priced goods that end up in our grocery shelves or in our living rooms, we have a weaker purchasing power with which to do it. Do you agree that might be one of the reasons why Canada has 30-year highs in its inflation?
Very short answer, Mr. Cross, 20 seconds.
Unquestionably, there's something like 1/3 of the CPI is imported. So there's going to be a direct impact there, particularly in high visible areas like food and energy.
Thank you. And that's your time, Mr. Poilievre. We are moving to the Liberals and Mr. Baker for 6 minutes.
Thanks very much, Mr. Chair, and thank you to all our witnesses for being here today. I won't have enough time to ask questions of all of you, and I hope you'll understand, but I do appreciate all of your contributions to today's hearing. I'd like to start with Monsieur Perreault. First of all, Monsieur Perreault, it's good to see you. Once upon a time, I was a Scotia banker, and it's good to see another Scotia banker here offering his perspective and helping us resolve these important issues. Could I just ask, and you spoke to some of these issues I'm going to ask about in your testimony, but I'd just like to make sure that it's clear for my sake and for members of the committee. Is the current rate of inflation experienced in Canada unique to Canada, or is this a global problem?
For the moment, a lot of it is global. right? So you're dealing with supply chain pressures and commodity price pressures. A lot of that is coming from the strength that we're seeing in the global economy. Now, it's not exclusively that, but certainly much of it as we see it now is global. As we go forward, we think more of that becomes Canada specific, less of it becomes global.
Okay. And could you speak to how Canada's inflation rate right now compares to other countries, the peer countries?
It's a bit of a, for reasons that Mr. Cross indicated, it's a little bit of a mugs game because you're comparing different things. For instance, our inflation is way lower in Canada than the U.S., but that's because we don't have used car inflation in our inflation calculation. So, we are generally in the ballpark of a lot of these other countries, but there is a big definitional issue which complicates things. For sure, inflation is well outside the Bank of Canada's inflation control range. That there is absolutely no question about.
Yeah, and I think that's fair. I mean, I think one of the reasons we're studying this is because Canadians are facing the hardships that come with high inflation rates. So there's no question that that's higher. But I guess what I would love for you to kind of speak specifically to is, or let me take a step back. I mean, from what I've read, and I've heard your testimony and the testimony from the others today about inflation, but also, I have a background as a management consultant at BCG and have spent a lot of time in business school economics classes and working with clients on such matters. And from what I've read, there's a number of factors that people have cited, and you cited some of these in your testimony, that drive the high inflation rate we're seeing today. Things like supply chain bottlenecks and shortages of key materials. You spoke about labor shortages in your testimony. Others have written about gas prices and energy prices as a factor. There's some discussion about increased consumer demand because driven in part by the pandemic, because after economies reopened, you saw a bump in consumer demand. I mean, these are the things that, and maybe a little bit of shift in the nature of the demand as well. I think some of the speakers today have spoken to that. I mean, do you agree with that these are kind of the major drivers of the high rate of inflation we're seeing today?
Generally speaking, yeah. I mean, the bottom line is we think, and again, our assessment has changed over the year, but inflation, apart from, weather-related effects that affect some crops and, of course, are kind of temporary by nature, the majority of the strength that we're seeing in inflation now, whether that's Canadian or U.S. or elsewhere, is simply the result of the fact that there is a tremendously strong appetite for goods globally right now, and there's just firms haven't been able to produce enough of those to meet demand, so prices have been creeping up.
Okay, no, that's helpful. I appreciate that. I just also like to point out that Mr. Poilievre said in his questioning that some people in Canada are calling the inflation we're seeing now just inflation. And to my knowledge, I haven't heard any of the folks speaking here today refer to it that way. To my knowledge, the only folks calling it that are members of the Conservative caucus. I don't hear that coming from anywhere else. So I just wanted to point that out. Mr. Perreault, I wanted to switch gears a little bit and speak to some of our economic indicators, if I could, or ask you to do that. During the pandemic, the government of Canada took a number of measures to help people survive the pandemic, put food on the table, pay the rent, et cetera. Most notable examples of that are the CERB or the wage subsidy, but there are a number of other programs both to support businesses and individuals. Could you speak to what would the result have been to our economy had that not happened?
These counterfactual is always very, very difficult, but I mean, it's certainly we can say that the dramatic supports being provided to households and businesses in Canada and other parts of the world are one of the reasons global demand is as strong as it is now. It stands to reason that had those supports not been as generous, that the economic consequences of the pandemic would have been much harder for a broad range of Canadian firms and households. But, would the recession have been more prolonged, deeper? I can kind of conjecture and say yes, but the question is, in my mind, more something needed to be done, something was done, was the right amount, and were the right things done, given our understanding of the situation now, relative to the understanding of the situation at the time. which of course are not necessarily the same things.
But what I hear you saying is those supports helped to protect a lot of people from significantly deeper hardship. Is that fair to say?
There's no question about that. If you look at StatsCan data on labor income, you had this very, very, very strange development from a historical perspective, which was as the pandemic hit, had a dramatic increase in the unemployment rate. But the transfer from the government to households was so large, you were so generous that you actually saw an increase in labor income, even though you had like this jump in the number of unemployed people. So clearly, very clearly, those supports help prevent a significant amount of hardship. No question about it.
Okay, thank you very much.
Thank you, and that is your time, Mr. Baker. We are moving now to the block, and usually we have Monsieur Saint-Marie. We have Monsieur Trudel with us. Welcome.
Oui, merci.
Yes, hello. Thank you, Mr. Chair. Thank you, everyone. I'm very, very happy that the Finance Committee is studying this terrible housing crisis we're experiencing. I think that currently, obviously throughout the world, there's a climate crisis, a pandemic, and we have a very severe housing crisis. There's numbers have been thrown around. My first question is for Madame Laflamme from Frappru. I know her well. I've been speaking with her regularly over the past 2 years. We talked about numbers. That's great. There's problems with housing here in Longueuil, in Montreal. There are 2,000 people in Longueuil alone that are waiting for social housing. In Montreal, 23,000 people are on the list. 40 to 50,000 people are waiting on social housing in Quebec alone. So the crisis is serious. Madame Laflamme, I know that at Frappru, you're close to many organizations. So if we can go beyond the numbers, can you tell us about the impact, about the increase of rental prices and housing shortages? Can you talk to us about that? Yes, you're right to say that behind the numbers, there are real human impacts. And I can tell you that they're quite grave. Throughout Quebec, we hear stories every day, every week of renters who are experiencing the consequences of this housing crisis. They cannot find a home they can afford. I gave you some numbers earlier about the number of households that before increases were already spending half of their income on rent. So people have to go to food banks. They have to cut on their essential needs like buying clothing, like getting clothes for the kids, food, cutting on heating and their hydro bill. This can have grave consequences. So we can feel their distress in renting households. The housing crisis and the increase in rents also has more extreme effects. In Quebec, we have moving day on July 1st because most leases end on that day, and that allows us to see the effects of the housing crisis more tangibly. This year, after July 1st, over 500 renting households had not found another lease. And an important portion of these households lost their homes, not because they wanted to, but because they were rent-evicted or evicted on fraudulent grounds. So there are all sorts of tricks that are being used to increase the price of rents, especially with new renters, which are increasingly large companies like Acalius, for example, that exist in many European cities and affect rent prices, and they're now here in Canada. So there are all sorts of ways that landlords use to get rid of households that are paying affordable rents. this is why we're seeing fraudulent evictions, including rent-evictions. So these households that had no problems are now experiencing grave problems because they can't find housing that they can afford. I told you earlier that vacancy rates are very low. In Montreal, vacancy rates increased, thankfully, because of the reduction in tourism and immigration. The number of renting households that couldn't find a new home was still very large. There were 200 in mid-July, and currently many of these households have still not found a home, and they're being housed by the city. So I can tell you that we have tangible impact. We're talking about human distress and an increase in homelessness. This has important consequences. There are social costs, but also financial costs that are much greater than simply investing in social housing. Very interesting. So the government is saying that they're doing something. They have a national housing strategy. $72 billion were planned in 2017. So there's still some confusion because in Ottawa, we often hear in the newspapers or that we're making affordable housing. We're making everything affordable. We're building housing. We're getting people in homes. And this is the goal of the strategy. And we know that the strategy was created in 2017 because there had been a break in investment since the 70s. If we had continued investing like we did in the 60s and 70s, 80s, we would have had so many more housing units. But let's talk about the difference between affordable and social housing. There's issues with co-investment and building rental housing. So the government says we're building affordable housing. But I would like you to tell us how the government is actually spending millions of dollars on affordability to find people homes at a more affordable cost, but that indeed that's not what's happening. Can you talk to us about that? Answer. This is an excellent question. I'm coming to the definition of affordable housing versus social housing. But first, I'd like to insist on the fact that the federal government withdrawing from funding social housing has led to the shortage in social housing, and this is experienced in Quebec and everywhere in Canada. The UN has stated that there is a shortage of social housing in Canada, and this is contributing to the crisis because these households can no longer afford market rents, and they have no alternatives. So when people don't pay rent, they get evicted, and then they have nowhere to go because there's no affordable units. All of the units that are available are more expensive. So the shortage of social housing is contributing to the housing crisis, and it's contributing to a homelessness crisis as well. So regarding affordable housing, we've never really supported this approach, but it came from Ottawa. It was created by the current government, but also by withdrawing funding from social housing over many years. When Ottawa started talking about affordable housing, it led to confusion because we were then able to fund social housing in some cases, but also private housing in others. So in theory, we can see affordability as the ability to pay. Thank you, Madame Laflamme.
Monsieur Trudel, and we are moving to the NDP and Mr. Blakey now for 6 minutes.
Oh, thank you very much. And I do actually want to follow up on that point with Ms. Raza, just in respect of, the money that the federal government does spend on trying to create housing. I believe she mentioned in her testimony, part of the issue right now is that given the definition of affordable, that's not necessarily producing, it's not actually helping if the limited amount of federal money that's being spent is being spent to build units that are still out of reach for many of the Canadians who are in housing crisis. And so I'm wondering if you could just speak a little bit to that, including what you think what the fix is, of what would government have to do in order to ensure that the money it's pumping into the national housing strategy is building social housing, ideally with rents geared to income, as opposed to units that meet a definition of affordable that is still out of reach for far too many people.
Right. Thank you, Mr. Chair and Mr. Blakey. Yeah, that's a great point. And if we dig into the affordability criteria of the capital funds in the National Housing Strategy, for example, the RCFI that I mentioned, only 20% of units are priced at 30% of median family income, so not individual income, only for 10 years. So that's not permanent affordability. We know that far exceeds what is affordable for most low-income individuals, even mid-income individuals, and it's not a large percentage of units either. So I think the fix and just to expand on that, the National Housing Co-Investment Fund has very similar criteria. So these are the biggest, most expensive programs in the National Housing Strategy, and if we wanted to genuinely address the housing shortage in Canada, I think it would require more aggressive permanent affordability guidelines, far exceeding 10 years. It would require some funds earmarked for social housing so that that funding is not going back to real estate investment trusts and very expensive buildings that really are only affordable for about 10% of the population in some cases. And yeah, so we just need, I think that answers your question.
Sure. And I mean, some of the upward cost pressure that's driven by the demand side of the problem, of course, makes it harder to meet the supply problem because land and buildings become more expensive. And I know you talked a little bit about this in some of your opening remarks, but I wonder if you could give the committee a sense of some of the things we should be recommending to government in order to try and cool down the market from the demand side of the equation, as opposed to simply supply.
Yeah, demand side would be, I think, simply ensuring that we are implementing some speculation and vacancy taxes. I think that kind of a measure would ensure that underutilized housing is actually meeting people who are seeking housing need. I think the incremental taxes on investment properties, again, is a very human rights-based solution to ensuring that we're actually leaving some properties on the table for first-time home buyers. Especially, I mean, I can speak as a millennial. It is very difficult to get into this housing market simply because I was born too late. So, that kind of a tax would address those issues. And we actually have a full research report, 100 pages, very long, but on exactly how we can address these issues through the National Housing Strategy. And so I would really love to share that with the clerk as well afterwards.
Okay, thank you very much. And I do know that the current government has proposed a foreign buyers tax. And I'm just wondering if your organization has taken a look at that and if you have an opinion on how effective that might be in terms of helping with pricing, or whether it may not actually provide that much help at all. And just wondering if you could give some feedback to the committee on that.
Yeah, so I think across the board, civil society folks have agreed that this foreign investor tax is not going to be effective because, first of all, when we're dealing with these corporate investors, we're dealing with global capital. So it's very easy for them to establish a domestic corporation, and then suddenly that's a Canadian corporation, right? So that foreign investor tax will no longer apply. And I think that often we use this shadowy foreign investor as kind of a shield to absorb widespread anger about Canada's housing market, when, as I demonstrated in my opening remarks, there are many things that we can do right now to utilize the supply that we have and to just fix the programs that we already have in place and not even spend a dime, like just by taxing people fairly and adequately according to the human rights guidelines and obligations that we have agreed to in law. We can address a lot of these housing affordability and supply issues.
Okay, thank you very much. Madame Laflamme, sur cette question de...
Let's talk about this affordability matter in federal government policies. Would you like to take some time to offer your own recommendations on this question? Yes, thank you so much for giving me the opportunity to do so. Of course, like my colleague just said, we share the same concerns about housing that is called affordable that isn't actually affordable. It's funded by the rental building credits that can lead to apartments being $2,000 a month, which is not affordable to many families. This was also documented by the Parliamentary Budget Office. So our solution is to insist on funding programs that are social housing, that are outside of the private market. So focus away from affordable housing and into social housing. It would be funded publicly by municipalities or other cooperative housing, and even housing that is developed by nonprofit organizations. If these programs are funded adequately, people can access housing that is geared to their rent, geared to income, so we respect their capacity to pay. And then the rent that's paid by other renters will go away from the other rental prices, which we're seeing in this inflationist market that's fed by the private market. So we think that that's the solution. Thank you for your question. Thank you, Mr. Blakey.
Second round of questions, and we have the Conservatives up. Mr. McLean for 5 minutes. You may be on mute, Mr. McLean.
Is that better? There's an extra little button on your microphone here, and I guess I must have pressed that. Anyways, Mr. Cross, I'll start with you, and thank you for coming here today. Mr. Cross, there's three types of inflation that we understand in economics. There's monetary inflation, there's asset price inflation, and there's consumer price inflation. And of course, the starting point for all these inflations is the monetary inflation. Would you agree that the pumping $500 billion into the Canadian economy in monetary inflation has led to asset inflation, principally landing in the housing market?
As I mentioned at the beginning, there's no question. I mean, you can't have inflation without an expansion of the money supply. The problem is it's not a one-to-one relationship. You can't say if the money supply increases X percent, you're going to get Y percent inflation, and you certainly have a lot of trouble saying you're going to get Z percent inflation in a subcomponent of the economy like housing. But clearly there's a broad association there. And it's not just monetary stimulus, it's also the fiscal stimulus too. All this money that we transferred to people, it wasn't just low interest rates, it was that people, and it wasn't just that we maintained incomes, we substantially increased people's incomes. That gave them the wherewithal to make down payments to meet the criterion for buying a house. So the two go hand in hand.
Well, correct. And if you think about the other financial assets, have also increased significantly. So those people with financial assets, including houses, had no other place to go but to put more money into financial assets. But specifically relating to housing, when you look at the investment in housing, when the risk-free rate is 0.25%, and people are racing towards what looks like an asset inflation environment, is the natural place for investments in Canada to be in housing?
Well, first of all, let's go back to also what I mentioned about the Bank for International Settlements. They've been warning about asset price inflation basically ever since the great financial crisis of 2008. And that includes Canada. So I also mentioned, housing prices in this country exploded when the Bank of Canada first lowered interest rates in 2015. We didn't have quantitative easing like a lot of other countries at that time. So again, it's more complex than just saying, we had QE and that all went into the housing market. Clearly, there's an association there, but it's a lot more complex than that.
Okay, so let's go back to asset price inflation here, because some of the other economists we've heard on this panel are talking about building an extra 1.8 million homes in Canada. The problem with building 1.8 million more homes is we already represent a larger percentage of our economy in residential construction in Canada, being over 11% at this point. when historically that's about a double the percentage of the economy we should be occupying with residential construction. So if you push more incentive into residential construction, are you not automatically pushing up the base price of those assets?
Oh, there's no question. I mean, we've had, because of high immigration rates and historically low interest rates, we've done everything possible to boost demand, and we weren't conscious of whether supply could possibly adjust to meet that. And the result has been this explosive increase in prices. So undoubtedly that's
so let's jump into that a little more if you can, please. So we've got an explosive increase in the products that it takes to build a house, and yet you look at timber prices and they haven't increased that much in Canada. Tell me where that disconnect is between the actual raw material increase and the actual construction material increase. Where is the value actually being escalated as far as inflation goes?
I'm not sure I follow the question. Where is the value going?
Yeah, so we've got timber that really hasn't, you know, and the same thing in the food market, if you will. You know, we've got beef costing more at the store, but you know, cows in the hoof are not getting the same increase in price.
I think I got where you're going here. I mean, obviously, most of it has gone into, most of the value has been captured by people already owning existing homes. It's not going into the construction of new homes. It's not going into the value-added chain. You know, it's been captured as higher prices by existing homeowners. And sorry, go ahead.
No, that's okay.
So, Mr. McLean, that's 5 minutes. Thank you very much. We are now moving to the Liberals and Madame Chatel for 5 minutes.
Merci beaucoup, Monsieur le Président.
Thank you very much, Mr. Chair. Of course, I'm much more solutions focused on this inflation issue and how it affects housing. Mr. Cross and Mr. Perot, both of you identified the root of the problem. You believe that we've had an increased population due to immigration in specific areas of the country. So there's more immigration and more demand for housing. These are due to federal policies, but policies that can increase housing supply in the market is decided at the municipal level. Recently, our housing minister announced that next month there would be a conference, a federal, provincial, and municipal conference. And this is what's important. It's coordinating policies to make sure that at the municipal level, we can create more housing. So, Mr. Perot, what would your advice be for participants in this summit? What would the obstacles be to municipalities who are trying to create more supply? The question is excellent. If there was an easy answer, we would have solved the problem, or we would have started solving the problem years ago. I think we have a political problem, a policy problem. The federal government determines how many people enter Canada, but at the end of the day, it's the cities that have the most power on where these people can go or how we can accommodate these people within cities. We have to find a way to change the legislative structure so that the interests of all involved be in line with the interests of the federal government. Maybe it's a matter of transferring more funds to cities or other way to incentivize them. But in my opinion, the source of the issue is this NIMBYism whether you like it or not, it's an important factor that limits housing development. We find ourselves with less housing and we all pay more, whether it's renters or homeowners.
Madame Chatel, you're on mute.
As you pointed out earlier, Monsieur Perrault was correct in mentioning that, at the core, the problem is really that the federal policy and the demographic increase is not matched by the municipalities and their supply. So the government announced a summit in a month's time with the municipalities. And what would be your recommendation to make sure that those policies are aligned and that we ensure that the municipalities are producing the level of Mr. Cross?
Okay, sorry, your screen froze there for a second.
Oh.
First thing before I got to recommendations, I would add that the situation is even more complicated than we've portrayed it up to now because of the pandemic. I mean, you may have noticed it was highly publicized in La Presse recently and some other papers that the population of our major urban centers, particularly Montreal, declined sharply during the pandemic. People are moving to Terrebonne and other areas outside of our large urban centers. So, that's just an additional complication of matching supply and demand is that geographically, demand has made yet another change over the last year. So that's going to make things more complicated. What recommendations is, no matter what you do, it's going to take years to fix the supply response. As Mr. Moran said, we're looking at a huge structural deficit. It's at current rates of building, it's going to take a decade just to put a dent in this problem. So there's not going to be any easy answers. Perhaps rather than talking about supply, which is what most of the focus is on, maybe we should be talking about reining in demand, about slowing down immigration. What's the point of allowing immigrants into this country if there isn't a place to house them? So
thank you.
Yeah.
Thank you. And that is the time. And we are now moving to the block and Monsieur Trudel for 2.5 minutes.
Oui, merci.
Yes, thank you, Mr. Chair. Thank you, Madame Laflamme, for your answer earlier. I think you and Madame Rassa illustrated the issue well, how the government is investing in affordability and that it's not actually housing vulnerable people and not improving access to housing. So there was a program, the Rapid Housing Initiative, that was created 2 years ago. It was initially $1 billion and then a second injection of $1.7 billion. One of the things that's interesting with that program is that it allows us to build housing quickly. As you know, social housing and co-ops can take 5, 7, 10, 12 years to be developed. Do you think the RHI is a good program to move forward in order to fund more construction? If not, what are other solutions to quickly create social housing units? Answer. Thank you for the question. The Rapid Housing Initiative is different from other national housing strategy initiatives because it's the only one that has that is based on a renter's capacity to pay, and the prices are not set by the market, which doesn't work, as I mentioned earlier. Additionally, this initiative is specific to public developers or nonprofit developers, so they are truly affordable and outside of the private market. I think it's a good initiative. I think it's appreciated both in Quebec and outside of Quebec. It also covers all of the costs of construction, so it makes it possible to build faster. But it's also the only initiative that's not recurrent and that wasn't planned over 10 years. There's phase 1 and phase 2, and that's it. So contrary to other initiatives, while it's the only one that can truly help vulnerable people, there's no continuity in this program. So that's something that would be good. It would be a good thing to make it recurrent. Another thing that's missing is helping people. In Quebec, for example, Quebec has to provide housing supplements for low-income renters who need support. And they also have to pay for community support because it's for highly vulnerable homeless people, for example, seniors or Indigenous people. So we need community supports as well. And this is not something that's funded by Ottawa. So there's a gap that we should be filling. Another thing about this initiative is that it's for people that are highly vulnerable. But as we've seen, current needs of rental households are great. There are some households that are low to modest income, and their only problem is that their income is insufficient to cover rent. So we need social and community housing to help those people and funding for other programs. This can come in the form of increases of transfers to provinces. Thank you. Thank you, Mr. Trudel.
The NDP and Mr. Blakey for 2.5 minutes.
Thank you. Monsieur Perreault, I just wanted to come back to something that you had mentioned in your testimony in terms of the extent to which low interest rates, particularly in an inflationary context, are encouraging certain kinds of investment in the housing market. And you had said that, in your opinion, if I understood you correctly, that interest rates have to come up in order to defeat some of these incentives. I'm just wondering if you have a sense of where you think interest rates have to get to in order to accomplish that, and what you think the impact would be for folks who do currently own houses and are leveraged to the hilt in order to have acquired those houses, and what that would mean for the Canadian economy.
Yeah, thanks, Mr. Blakey, for the question. So just a couple of points on that. So we do think interest rates need to go up, but they need to go up principally to try and bring inflation back into kind of the realm of the Bank of Canada's target. So that's the principal driver. Now, of course, in raising interest rates, you are going to cool the housing market. There's no question about that. Or in principle, you're going to cool the housing market. We think, one way to think about where interest rates need to go is the neutral rate for the Bank in Canada, we estimate, is about 2.5%. Currently, those rates are 25 basis points. So at least 200 basis points so 2 percentage points of tightening is required just in our framework for the Bank of Canada to be no longer stepping on the gas, and if you will, just kind of being in neutral. So that's they're not stepping on the brakes either. So you're looking at something like 200 basis points just to bring you closer to balance.
And how confident are you in current homeowners' ability to absorb that kind of interest rate hike without having to sell their home?
Well, in principle, OSFI regulations require that when homeowners qualify for mortgages, they're qualifying at a rate of interest that is dramatically higher than what they're paying now. And if in fact we're right, and rates go up about 200 basis points between now and say sometime next year or the end of this year, that is well within the qualifying rate that is used by banks and other financial organizations to figure out if households are going to be able to afford or continue paying servicing their debt in a higher interest rate environment.
And are you confident that the real economy reflects what should be the case given the policy?
I'm not sure I get the question.
Well, in the sense that people have that buffer. Are you satisfied then that the buffer that's in the policy will act in the way that it should for most households, and that interest rates can go up without causing serious stress on household finances to the point of having to surrender their home?
Very short answer, Mr. Perreault.
Okay. Yes. Yeah, I think so.
Okay. Thank you.
Oh, thank you. Thank you, Mr. Blakey, this time. And we're moving now to the Conservatives and Mr. Chambers for 5 minutes.
Thank you very much, Mr. Chair. Thank you to all our witnesses for being with us today virtually. Mr. Cross, you're currently at the Macdonald-Laurier Institute, but you mentioned you were the chief economic analyst at StatsCan, been there for a number of years. We've seen through all parts of the business cycle, a federal government that has spent through all stages, and a central bank that has kept interest rates artificially low. You even referenced the kind of surprise cut in interest rate cut in 2015. When the economy was at a record unemployment, where things were going well, we had economic growth, and record unemployment, we were spending money. The government likes to point to a really strong Q3 GDP growth and a rosy outlook for next year. Do you think that the economy requires additional government spending at this point?
Oh, no, I don't think there's any question that we should be withdrawing both monetary and fiscal stimulus. And frankly, we should have started withdrawing it a long time ago. I think it became pretty obvious fairly fast after the pandemic began that it was not an economy-wide shock, that the biggest shock was to specific industries providing face-to-face services. At that point, somewhere around May, June 2020, we should have started switching away from economy-wide stimulus, especially monetary stimulus, and started channeling money targeted specifically at these people. But we've just kept at it with the economy-wide monetary stimulus. And I think in retrospect, it's now becoming increasingly obvious that monetary stimulus was not the way to go in this particular crisis.
Thank you very much. And we also learned that stimulus typically is temporary, timely, and targeted. But we typically, at least in this circumstance, we got timely and missed the other two. In your opinion, Mr. Cross, is deficit spending contributing to inflation?
Well, it clearly has over the last year. It doesn't always, but in the last year, there's no question the Bank of Canada has been purchasing government bonds. They've been monetizing that debt. They've been doing that to keep interest rates low, to allow the government to continue to run large deficits. But there's no question that the quantitative easing conducted by the Bank of Canada has been reflected in a substantial increase in the money supply. And by the way, that's a big difference between what we're seeing now and the ongoing monetary stimulus, low interest rates. After 2008, we never saw the money supply and credit explode during that period, but we have over the last year. So something is clearly different about stimulus since the pandemic began. And not surprisingly, inflation has taken off.
Right, thank you. And our committee is looking in particular at inflation, but specifically also in housing. And we see some of the effects of that stimulus in the housing market. 85% increase in housing since 2015. It follows an incredible amount of government spending and increasing money supply, like you just mentioned. Bloomberg now says that we have the second highest inflated housing market in the world. Interest rates, government spending, money laundering, all of these things are kind of within the federal government's remit. I'd like you wrote a paper about the increase of money supply from Macdonald-Laurier Institute and the incredible expansion of the monetary base. Is it a stretch to believe that this money ends up in the real estate market as it does in other asset classes?
You can't draw one-to-one necessarily, but there's no question the low interest rates. I mean, part of that increase in the money supply was because the Bank of Canada was buying government debt. It was keeping interest rates low. Keeping interest rates low is going to feed into the housing market. So, you can't, trace dollar bills going from one to the other. But there's no question that the accommodative fiscal and monetary stimulus was the largest part in the sharp run-up in housing values we've seen over the last 2 years.
Thank you very much. I have time for one more question. Have you, Mr. Cross, thought about or considered what would have happened to interest rates or the value of the dollar had the government run significant, massive deficits and the Bank of Canada not been the primary purchaser of the debt created by the federal government?
Yeah. Interesting question. I mean, there was a sort of a period of panic there in March 2020 when the pandemic was just getting underway. We talk about that we live in an era of low interest rates, but interest rates for corporations especially were starting to rise at that time. People were panicking. There was a flight from risk. We saw even some provincial governments, notably Newfoundland, were having trouble raising money. So, clearly there could have been, without the Bank of Canada intervening in a lot of these markets, not just government markets, but even corporate markets, we could have seen much higher interest rates. So, but how long would that panic have lasted? How quickly would people have realized, okay, this isn't going to shut down our whole economy, it's just going to be segments of it? That's a counterfactual that is impossible to answer.
Thank you. And that's your time. Thank you, Mr. Chambers. And we're moving to the Liberals and Mr. McDonald for 5 minutes.
Thank you, Chair. Chair, I just want to, it's interesting hearing this discussion from, talking about housing and then bouncing back and forth to the economy. And, it's good to remind ourselves every once in a while that the pandemic came on within a very short time period and decisions were being made. And there was a sense of urgency. There was a lot of people that required food on their table. A lot of people were out of work. There was barriers after barriers after barriers for families out there that were needing, staples. And I think the government had a short time period to react to this, and they reacted immensely and in the right direction. And as we've seen with Bill C-2, that we have now scaled back the investments and started to target where those priorities are now for government. But a reminder, in the years leading up to the pandemic, the Canadian inflation was relatively stable and close to its formal target of 2%. As Trevor Tombe suggested, a professor of the Department of Economics, University of Calgary, the pandemic was not only a public health crisis, but also the sharpest economic contraction in Canadian history. The pace of the recovery since those dark early months, has been nothing short of remarkable. So I want to ask Mr. Perreault if he can talk a little bit about, can he elaborate to what sort of impact minimal action would have done to the economy, including housing, if we hadn't have made those investments?
Can I just clarify, Mr. McDonald, are you talking about the investments done in the context of the pandemic or things before the pandemic?
In the pandemic. Okay. Thank you.
So I think, again, counterfactuals are always a little bit tricky, but it's almost certainly the case that the economic harm would have been significantly larger. Households' financial positions would have been impacted by a significant loss of income that clearly wasn't more than made up for by the government. Same on the business side. So there's no question. There's no question that whatever was done helped support the Canadian economy. I think the question is, did we do the right amount? Did we do the right thing? And all countries around the world tried various kind of permutations around similar things. But it's very difficult in my mind to conceive of a world in which we did not come out of the pandemic in reasonably good economic shape and not ascribe a significant portion of that to what was done by the federal government, provincial governments, Bank of Canada to try and keep us afloat in what was a tremendously turbulent time.
Thank you. And I just, you hear economists with various degrees of opinions and relevant to CPI. And how much control does any one or institution have on the distortion COVID has created? So how much control does any institution, any government at any level have any control or provide any control on what COVID has done?
Is that a question for me?
Yes, please. Sorry, Mr. Perreault, yes.
I think, reasonably limited control. That being said, when governments are in a position to shut down various parts of the economy, then clearly that affects kind of the pricing dynamics in that space. But, I'd like to think that the much of the inflationary impulse that we are dealing with now in Canada is ultimately the reflection of policies taken by the Canadian government and other governments around the world to try and get us out of this. And that kind of additional firepower, there's strength in numbers, I think is more responsible for the inflation outlook now than any single thing any one government has done around the world.
Thank you. I'm going to move, Chair, to, I think it's Mr. Moreno. I just want to ask, in his preamble, he talked about the rate of construction declining, and I'm just wondering what caused the rate of that construction to decline over the past number of years.
Mr. McDonald, I'm going to defer to my colleague, Professor Hayter, to answer that.
Certainly.
Thank you. If you look at the rate at which Canada was constructing homes in the 1970s, we were building about 12,000 new dwellings per million population. And that rate since then has come down to about 5,000 to 6,000 new dwellings per million population. Not only that, even in absolute terms, our construction numbers have been down. And that's the primary reason why we believe that the imbalance between demand and supply is the primary cause of housing price inflation in Canada. It's not for just 5 years or 10 years. It's fairly deep-rooted.
Okay, thank you, and thank you, Mr. McDonald. That is the time, and we're just went over the halfway mark in this 3-hour session. This is an opportunity. We're going to suspend for 5 minutes so that witnesses can stretch their legs, take a bio break, whatever you like, and we're back in 5 minutes, everyone. your cameras on. That's great. Your headsets, terrific. And we are now moving into our third round. And this round we'll start with the Conservatives. And we do have Mr. Stewart up for 5 minutes. Mr. Stewart. Oh, Mr. Stewart's not. Yeah, there you are. There you are.
I'm here. Yeah.
Good to see you, Jake.
Sorry. Thank you. Thank you, Mr. Chair. I've got a couple of questions that I'm going to ask a few different panelists, and for the most part, I think it's just yes or no answers. I'll start with Mr. Perreault. Scotiabank recently released a report that among all G7 countries, Canada came in dead last when it comes to housing supply per capita. Is that correct?
Yes.
Thank you. How many homes do we need to add to our market just to catch up with the rest of the G7?
About 1.8 million.
Thank you. Earlier, I mean, I'm not an economist, but like you, but it's safe to say that when the supply is low and the demand is so high that the price of a home will be higher. Would you agree with that statement?
Absolutely.
Earlier, you made a comment early in your discussion that, and this is just a point of clarification, but earlier when you began, you said that this problem was a made in Canada problem. But then near the end of you were questioned by another member, and it seemed that your stance changed a little bit. It seemed more that, the opinion of economists changed over the last year and a half, which I believe you said, and I believe that to be true. But I'm just wondering, the ballooning housing crisis here in Canada, it seemed like you told one of the members here that it was a global phenomenon, but early in your introduction, you said that it was a made in Canada problem. Could you just clarify
sure.
just how much of this actually is a made in Canada problem?
So yeah, apologies if I led anybody to confusion. So on the housing thing, I think this is a uniquely made in Canada issue. The point about it being broader than a Canadian issue was related to inflation and some of the inflationary dynamics, but housing, I suppose you could argue that the decline in long-term interest rates around the world, which occurred in the pandemic, contributed to the housing situation here, but fundamentally, not building enough homes, that's our problem.
I appreciate that. Thank you. Question now for Professor Hayter. In comparison to the 1970s, how many homes are built today in Canada?
Thank you for the question. I think around that time, we were building
Mr. Hayter, and I apologize if you could just raise your mic a little bit. Yeah, just your voice a little low. If we just want to be able to hear you. Thank you.
Thank you very much. I hope you can hear me correctly. Earlier, we were building something around 300,000 homes, and not just any homes. Even in Ontario, there were 40,000 residential rental units were being built, and those numbers declined over the years. Right now, we are in the range of between 275 to 300,000 homes built every year. But given that we have a very large population base compared to the one that was in 70s, in relative terms, this becomes a very slow or small supply.
So would you say that we're building about half as many homes as we did?
Not in absolute terms, but in terms of number of homes built per capita, yes. The rate of construction is almost half.
Thank you. Also, Mr. Hayter, when Justin Trudeau took power, the typical home costed $434,500, now $811,700. Over 85% inflation in 6 years under the Trudeau regime. Last year alone, home inflation hit 25%. Is it fair to say that we have a housing supply crisis right now in Canada?
We do have a housing supply crisis in Canada.
Thank you, Mr. Hayter. Last question to you, sir. In terms of how has ultra low mortgage rates impacted home sale prices in this country?
The way ultra low home mortgage rates affect is that the monthly mortgage payment becomes smaller, which means that the home owners or prospective home buyers are able to purchase larger value homes because their monthly mortgage payments are low, and that is the reason that they move or gravitate towards higher priced homes. So that contributes to a little bit of housing price inflation.
Thank you. Appreciate your question. Mr. Chair, how much time remaining?
We've got about 25 seconds.
Housing inflation is homegrown in Canada. Bloomberg reports Canada has the second most inflated housing bubble in the world. The average family must spend 2/3 of their gross income in places like Toronto and Vancouver, where they're ranking 2nd and 5th on planet Earth. I'd just like to say again, thank you to Mr. Perreault for also chiming in. But yes, this housing ballooning in Canada is homegrown and caused by the Trudeau government. Thank you.
Mr. Chair, you're on mute.
My apologies. I just thank Mr. Steele for that. And now we're moving to Ms. Zarowitz for 5 minutes. My apologies.
Okay, thank you so much, Mr. Chair. I'm just going to start off with a couple of statements. There was an earlier comment about why don't we just deal with the demand side and just slow down immigration. Just want to make 3 comments on that. Immigration, as we know, is key to Canada's economic growth. It always has been. It's also key because we have such huge demographic challenges, so huge number of people retiring and a very low birth rate. And especially right now, we have a huge labor shortage issue across this country. And so we really do need to keep the demand side up. So I want to make sure I address that. There was a comment that was made around sort of more targeted and widespread sort of support during this pandemic. Starting last summer, it wasn't at C2, starting last summer, we actually started targeting the support towards very more specifically. And we did it very, very deliberately. And we have been continuing to target our support as we move along. And I do want to sort of point out that even after we introduced our fall economic statement, we continued to have our AAA credit rating internationally confirmed. And so to me, that shows some confidence in terms of how it is that we're going about spending and how it is that we're proposing to continue to support our economy coming out of this pandemic. Mr. Perreault, I'm going to sort of address my first question, just because the narrative here is that over the last 2.5 years, the actions of the Trudeau government in trying to urgently address and support the Canadian economy has led to the housing problem and the housing crisis and the housing inflation that we have today. Would you say that the housing inflation that we have now, and maybe the housing crisis that we have right now, has been a 30 to 40 year problem in the making? So it's been a number of things, whether it's tax changes, whether it is lack of coordination or efforts along all 3 levels of government, whether it is, the different levels of government not supporting some sort of a national housing strategy. Would you say that would be a true statement?
I think it's fair to say that the housing challenge in the country is not new. It's been perhaps turbocharged the last number of years because of population growth. But it is certainly not a new phenomenon, and it is not unique to any level of government in the country.
Okay. And I think that and so you would say it's more than just the last, so you said population growth, but you'd say that that's something that over the last 10, 20 years, or would you say it's more recent, like the last 2 to 5 years?
Well, certainly since 2015, we've seen a tremendous increase in immigration, which I think is fantastic. I mean, I am unreformed pro-immigration on that front. The challenge has been that strengthened immigration has led to very rapid population growth relative to what we've been experiencing the last 20 years or so. And that, I think, kind of amplified some of these stresses in the supply and the delivery of housing supply across the country.
Okay. Okay. You had mentioned in your remarks earlier, although I would say just to that comment, Mr. Perreault, I do believe that there has been a shortage of attention that's been made on housing, on rental housing in terms of, and more housing at all 3 levels. And I do think that needs to be put on the record as well. And it's not just the population growth. I think there was just sort of different levels of government not really focused on ensuring that we had an adequate number of housing supply as we were growing our population. Would you say that that's true?
Yeah, I mean, if you go back to 2016, which is kind of too early in the population boom, our level of housing in Canada, again, if you compare it internationally, it was very, very low relative to population.
Okay.
So, like it's worse now, but it wasn't great 5-6 years ago.
You had mentioned that we may have to change sort of legislative structure because NIMBYism is definitely a problem. In your view, what are the main things that provinces and municipalities should do immediately to help overcome some of these NIMBYism problems and build some more housing?
That to me is a political question more than an economic question. I think the economics are pretty straightforward. Like it's in everybody's interest to make sure that we right-sizing housing and proper densification, all this kind of stuff. If there are financial constraints or considerations that are delaying that or making that more difficult in municipalities or provinces, I think that can be addressed. But I think at the heart of it is simply kind of political challenges in how municipalities want to deal with, and province to some extent, with the fact that populations are rising, and that is forcing some pretty difficult choices on the part of local politicians.
Thank you, and thank you, Ms. Zarowitz. That is the time. We are moving to the block, and Monsieur Trudel for 2.5 minutes.
Thank you, Mr. Chair. Madame Laflamme, we've established the fact that the government has been investing funds, but it doesn't lead to housing more vulnerable people. We talked about the RHI. At first, we invested $1 billion. $4 billion of projects were submitted. There's a municipality that requested $7 billion. Here in Longueuil, we have a great project that feeds people. They have clienteles in like elderly communities, homeless communities, and vulnerable people. And we keep getting told that there's not enough money to help with these types of programs. The federal invested much of its funds to create affordable housing that wasn't actually affordable and to make the rich richer. We need to take care of vulnerable people. Madame Laflamme, can we take these funds that are currently making fake affordable housings, and can we redirect it to community organizations that are on the ground, that understand the needs in the field, that could get units out of the private market and to ensure a long-lasting affordability of housing? Answer, yes, of course. This is part of the solution. Today we're talking about supply. I think we have to be careful when we talk about supply. It's not just any kind of supply that will respond to our needs, especially the most urgent needs that we've talked about today. We've seen it in Quebec, especially in Montreal. Construction of rental housing is being done by large companies, and they're creating very small units that are very expensive and that don't meet the needs of larger families. This is not solving the problems of these households. So with the RHI, we need to invest more. We need to invest more in programs that fund public housing. RHI demonstrated the need. We saw that there were more requests for projects than the funds that were available, and this highlights the importance of programs like this one. This meets the needs in the short term. This is very important about social and community housing. We need to create housing units that will remain affordable and they will help build communities. We have to get out of this speculative approach that is based in the private market. You asked a question about acquisitions by public organizations.
All over the time, but thank you. And we're moving to the NDP and Mr. Blakey for 2.5 minutes.
Thank you. We heard from the CMHC the other day that in the decades leading up to the cancellation of the national housing policy in or around 1995 by the then Liberal government, that CMHC was involved in delivering between 20 and 30,000 units of social housing every year. And so even if you take the low number, 20,000, and you times that by the last 25 years, that's about 500,000 units of social and affordable housing that didn't get built. And that is in keeping with some estimates of the number of units that we would need in order to get ourselves out of the housing crisis that we find. I wonder, Ms. Raza, if you could just, I know sometimes when people hear about the construction of social housing, they think, well, I'm not going to be in social housing, so that doesn't really make a difference for me. But when we look at the spectrum of housing and housing need, often, serving one portion of the housing spectrum can have good effects for everyone on the housing spectrum. So I'm just wondering, Ms. Raza, if you could take my remaining time to talk about the housing spectrum and how investment in social housing can really help the overall housing market.
Yeah, absolutely. I mean, you raise a good issue because, as I mentioned, compared to other OECD countries, so similar countries to Canada, we have far lower social housing. So we're at about 4% of the total housing stock, whereas the average is 7%. And then countries like United Kingdom are at 17%. So there's a huge gap there that, obviously lack of investment over the past few decades has resulted in. And you're correct that, like, for example, there's a huge rental arrears issue happening right now. A lot of low-income folks are getting evicted and have nowhere to go. And if we start targeting more programs towards folks, their specific needs, then we'll have less competition for these generic, units that everyone seems to be competing for in the hot housing market. And just to speak more to addressing people's specific needs, that's something that we are not adequately doing right now through the National Housing Strategy. And so, there's the opportunity to invest more in social housing, but then there are also all of our other programs which claim to be addressing priority groups, for example, low-income folks or Indigenous peoples, persons with disabilities, but then there is no collection of disaggregated data to actually see if we're meeting those people. There's no monitoring. Even for the Rapid Housing Initiative, we claim that we want to invest 25% of all housing funds towards women and girls, but then only 5 to 10 points out of 120 for the Rapid Housing Initiative are actually given towards projects that meet the needs of women and girls. So that's not 25%. And so, I think there's definitely a gap here in terms of addressing specific priority populations. Sorry, are we over time, Mr. Chair?
Thank you, Ms. Raza, and thank you, Mr. Blakey. And now we are moving to the Conservatives. Mr. Poilievre for 5 minutes.
Thank you very much. Question again for Mr. Philip Cross, who again is Stats Canada's former chief economic analyst. Do you think large deficit spending is contributing to inflation?
Oh, there's no question in the current instance, especially because the Bank of Canada was monetizing that debt. So it directly fiscal stimulus became monetary stimulus.
And by monetizing, you mean they created more cash, increased the money supply?
Yes, they bought government bonds.
Right, and they buy those bonds with two ways. They either give the seller, the bank or the financial institution, a deposit at the central bank, or they just convert it right into paper currency and literally print it. So that it means more dollars chasing fewer goods and raising prices. Now, the defenders of this money printing claim that, there's nothing we can do about inflation. They say that everybody's suffering, but that is actually not true. There are many countries that are not experiencing inflation. I point, for example, to Switzerland. Now, Switzerland is smack dab in the middle of Europe. And yet, it has the same supply chains, the same pandemic, the same geography. And yet I have the data here for Switzerland's inflation. It's 1.5%. Europe has inflation of 5%, 3 times higher. Now, why is it that Switzerland has a third of the inflation of the surrounding countries? Do you think, Mr. Cross, that it could have anything to do with the fact that Switzerland's budget deficit is only 1/3 of the average Eurozone budget deficits as a share of GDP.
Certainly a contributing factor. Another is, in fact, I started the day today watching Bloomberg, as I always do, and they were talking about the sharp rise of the Swiss franc recently compared to Europe. So, that's obviously helped keep prices down in Switzerland as well.
Right. When you have a more powerful currency, you can outbid foreign countries in internationally priced commodities like energy, foodstuffs, fertilizer, and other things. So even things that are priced internationally are again repriced based on the power of one's currency. And if you're printing lots of cash, your currency is less valuable than it would be. I also note that supply chain dependent countries like the island of Singapore, Italy, South Korea, Australia, France, Indonesia, China, Switzerland, Saudi Arabia, and Japan all have lower inflation than Canada. Most of them have run smaller deficits and have printed less money as a share of their economy. And finally, in the early fall, there proved to be a nearly 1-for-1 correlation between money supply growth in the G20 and inflation among G20 countries. So those that were printing more money to fund their deficits had higher inflation. Those that were printing less money because they had small deficits had much less inflation. Does it make, isn't this sort of basic economics, Mr. Cross, that if your money supply is outgrowing your economy, that you're going to have higher prices?
Broadly speaking, yes. The problem is, though, that when we try to apply strict monetarism, this idea that of Milton Friedman, we can replace the Bank of Canada or the central banks by a computer and we'll just increase the money supply by 5%. It didn't work. It ended up in tears in the early 80s when we tried it. So there's precise relationship isn't there, but there's certainly a broad association.
A broad association. And speaking of Switzerland, which has incredibly low inflation, and by the way, a lot of people think tight monetary policy runs against the job creation goal. Switzerland has an unemployment rate of 2.6%. Again, a third of the rate of the broader Eurozone. So by keeping inflation down, they're actually creating more job opportunities for their people. But Switzerland has a lower inflation target than Canada. They target 1% instead of 2%. And it's interesting that a country that has done that actually avoided the worst of the 2008 financial crisis and has had pretty much the best economic results throughout the COVID crisis, certainly among its neighbors. What do you think about a more strict and lower inflation target?
Probably in the current situation, probably it's an uncertainty. It's a newness that people don't need to deal with. I think just getting back to 2%. The other problem, though, I would generally go back to my opening statement is, I'm not at all convinced. In fact, I'm sure the inflation rate in Canada is much higher than 4.8%. If we just added in used car inflation, you'd be approaching 6%. But if you started taking account of shortages, you'd be way north of that. How are shortages in Canada compared to Europe and Switzerland? I don't know. I think they're probably comparable to the United States.
Thank you.
But I just caution against using the printed inflation rate from statistical agencies. Sorry.
Agreed.
Okay. Thank you, Mr. Cross. Thank you, Mr. Poilievre. And we are moving to the Liberals and Mr. Baker for 5 minutes.
Thanks very much. I just wanted to come back to something that Mr. Poilievre was just talking about. I think it's okay to have different points of view after we've interpreted the facts, but facts are facts. So Mr. Poilievre was speaking about Singapore, and I'm reading from Trading Economics here. Singapore's annual inflation rate rose to 4% in December 2021 from 3.8% in November and above the market consensus of 3.75, pointing to the highest figure since February 2013. Main upward pressure largely came from cost of food, housing, mostly due to accommodation, healthcare, et cetera, et cetera. So I don't know Mr. Poilievre's assertion that Singapore has somehow mastered and avoided inflationary pressures is obviously incorrect. From BNN Bloomberg about Switzerland, who Mr. Pliyev was also speaking about, surging property prices mean Switzerland's residential property market is close to a bubble, according to a UBS Group AG gauge. The UBS Swiss Real Estate Bubble Index rose to 1.9 points in the second quarter. The cost of residential housing shot up by the most in 8 years during the period, the bank said. Mortgage growth also accelerated. So I just wanted to make sure that we're sort of operating in fact here as we're making assertions about what's happening around the world and how it compares to what's happening here in Canada. What I wanted to do, if I could, Mr. Moranis, I'd like to come back to you if I could. I listened with interest to your opening statement, and during that statement, you spoke to the primary cause of the increase in housing prices in Canada being the lack of supply. Did I understand that correctly?
Definitely, we responded that one of the major contributing factors is lack of supply. I would also like to add that the trading system of how Canadians buy and sell properties is completely contributing to inflationary prices, because last year on the multiple listing services, which are run by, in essence, private clubs, provincially and or locally, they are against. The Prime Minister came up with a good point and said that he wanted to maybe extreme, but criminalize blind bidding with multiple offers. Trading is legislated provincially, but just in Toronto this last week, there was one property had 65 offers. Over 70% of all properties are selling over asking price. You would not offer over asking price unless there was two or more bids on that particular property. And the industry and the multiple listing systems are, and in fact, the provincial associations are against open bidding on multiple offers, which is in the consumer's best interest. Why should someone pay $50,000 or $100,000 more than the second best offer on a property? It makes no sense. So, this is something, whether the industry is made into a crown corporation, MLS is run by the regulator provincially, the system is totally broken. It's contributing to inflationary price bidding on individual resale properties, which represent about 70% to 80% of all Canadian-owned properties residentially that are sold annually.
Okay, I appreciate that. And so could I ask you then, could you talk through for me, if we have, I think I only have about a minute left. Okay. So just very briefly, what are the things that I think the number of you have spoken about the fact that this is something that to address the increase in housing prices, multiple levels of government need to be working together. If you had to make a list of the things that need to be done at all three levels, what would that list be?
Well, there's definitely all three levels. I mean, there's supply, there's demand, there's trading. Real estate trading is governed by the province. Supply is determined by both the province and the municipalities. And, the federal government has sort of got the overview and purview. One of the things, and I just want to say, history repeats itself. I'm not sure, you guys may be all too young to know this, but there was the Wartime Housing Limited Corporation, which was the precursor of CMHC. During the war, they built all these houses. I mean, for gosh sakes, we have one of the biggest countries in land size. The federal government is sitting on tens of millions of hectares of land. Put that land, put it out in the system, figure out what the program is, and you could build 1 million houses a year and create all these new communities that were created that make sense to improve social housing, affordable housing that were created around World War II.
Yeah, really appreciate this. Thank you very much.
Yeah, thank you. Thank you, Mr. Baker. That is time. And we are moving members into our fourth round. And we have the Conservatives up for 5 minutes. And Mr. McLean.
Well, thank you, Mr. Chair. Can you hear me this time? Good. Thank you very much. I will note particularly that we do have in Canada. I think we've heard this clearly from all of the witnesses here today. Housing inflation here is homegrown. Now, Bloomberg reports that Canada has the second most inflated housing bubble in the world. The average family must spend 2/3 of their gross income on monthly payments for the average home in Toronto or Vancouver, which Demographia calculates respectively as the world's 5th and 2nd most unaffordable housing markets. But I look at the papers we're getting, and I've got a deficit here as far as the actual numbers go. We're looking at the data here. We look at data that actually says we actually need 1.8 million more households in Canada. And yet, Mr. Perreault, I'm going to ask you this question because I was at a housing conference that you hosted some time ago where you noted that 72% of Canadians own their homes. And that was a very good thing. But then you jumped to the conclusion that we need more rental housing in Canada. Well, let me give you a reality perspective on downtown Calgary, where we do have greater than 10% vacancy in our rental housing. We've also got more towers going out, being funded by more money coming from we don't know where. This is part of what's building here. We do not have a shortage of housing. We have a shortage of certain kinds of housing, being single-family homes. But if the solution is to build more houses and we're jamming a whole bunch of new construction costs, limited labor into building a product that is going to have to jump through a bunch of hoops here, including governmental hoops, are we not going to be contributing in that case to even more housing inflation?
So it's it's a double-edged sword. We're kind of caught in between a rock and a hard place here, right? We need the simple reality, as you point out, is there is at present, even if we can get municipalities and provinces, everybody was lined up and said, okay, build whatever you want and wherever you want. The reality is that even in that world, there's a shortage of workers and a shortage of materials. So if you, in that system, throw in, okay, let's build 500,000 more homes a year. Currently, doing that is inflationary. Sure, it would help over the long run. The more homes the only way to restore some level of affordability is at the end of the day for, there to be the right number of homes for the number of Canadians that are out there and the right kind of homes. Again, rental or owned doesn't really matter. But to get to that place, many years from now, probably, you're going to have the interim of, stretch supply chain, stretch construction industry that is going to create more problems.
Gotcha. So let's look at the actual data here that I have in front of me here right now. And it's, the year-over-year change in MLS home price index diverged between single-family homes and condos. Condos started to go down as far as the year-over-year increase at the beginning of the pandemic. And single-family homes, of course, skyrocketed. So we've got a creation here of the wrong product on the market at the wrong time. Does that mean we're short of housing units in Canada when I've got a 10% vacancy in my condos in downtown Calgary?
We are. I mean, I think there's no way to, it is true that in certain markets, supply demand conditions are better met. That's true in Quebec, for instance. Quebec doesn't have nearly the same problem as some other provinces do on the housing side. But as a nation, there is clearly a deficit of supply relative to demand.
So go back to that Vancouver and Toronto issue where, of course, getting a single family home costs more than $1 million, $1.1 million. You think that that's really where the problem is focused in Canada. Are we looking at potentially the fact that every one of these sales that's happened during the pandemic, 30% of those are actually second homes for families? So they're investing in these properties as opposed to buying them to live in.
Well, presumably they're investing to rent. So one of the, I think at the conference you're talking about, one of the implications, I think, of decreasing affordability is that increasingly folks are going to have to rent as a living arrangement. There's no, if you can't afford to buy and you can afford to rent, you're going to rent. So in that world, unless you fix affordability, there is de facto going to need to be more investors in the marketplace, more people owning number of units.
And exactly the case. So if you drive up the cost of the affordability of a home, as the monetary and fiscal policies of the government over the last handful of years has done, you've effectively created a problem on your own. So this isn't something that you didn't see the lever ahead of time. Let's spend a whole bunch of money and we won't create inflation. I think most economists would say that that amount of insertion of $500 billion into the Canadian economy, the $2 trillion economy, is going to, by definition, create inflation. Would you agree?
Short answer, please.
Well, that was by design, right? When you stimulate, you're doing that to try and raise economic activity, raise inflation, of course.
Thank you. Now, we are moving to the Liberals and Madame Chatel for 5 minutes.
Merci.
Thank you, Mr. Chair.
Follow up on Mr. McLean. I would like to hear Mrs. Raza, what's her opinion on whether she believes that the only shortage right now in the housing is about single-family home.
Yeah, thank you for raising that. As we have discussed, I think social housing is definitely a shortage. We are seeing shortages in single-family homes as well. I will say that the point made about how condos are being overdeveloped in place of single-family homes, that is a trend that we're seeing, and a lot of our community partners have mentioned that, for example, you'll see a family of new immigrants shoved into a one-bedroom condo, 7 people living in one bedroom. And you see that with folks who are renting and have to put towards their rent over 30% of their income, and they're still sleeping in one-bedroom apartments. So I do think that the type of supply is a major issue that we're seeing. And again, that's why we tend to go to human rights guidelines. It sounds very airy-fairy, but really it's all about looking at people's needs and then building housing according to those needs and creating guidelines and criteria for housing that addresses those needs directly, right? So.
Merci. Je voudrais...
Thank you. I'd also like to go back to Madame Laflamme. The plan for managing supply and demand and housing equity is going on the right path. Recently, we announced $4 billion to eliminate challenges for supply municipally and to create more housing faster. It's an accelerated fund. And when I hear Mr. Perreault, I understand that it's important to manage things municipally. We also announced $2.7 billion to help affordable housing developers to buy land and buildings, to expand on the cooperative model. We also have a program to incentivize a first-time homebuyers incentive. So we announced that we would, Madame Laflamme, you mentioned that it was difficult, or Madame Raza, that it's difficult for young people to buy a house. We also have a program for renters, a rent-to-own program. We also have programs to avoid speculation. There's an anti-flipping tax on residential properties to ensure that properties are held for at least 12 months to reduce speculation in the market. So would you say that these measures would help the points that you raised? Madame Laflamme, and perhaps after Madame Laflamme can answer. Thank you for the question. It's a good question. It's at the heart of the conversation that we're having on the increase of rental prices, of housing prices, and support for rental households who are the people who are being targeted by the National Housing Strategy. And we also need people who have people who need help accessing property. These are two different needs, and they impact one another, but we have to have a holistic view to make sure that we don't neglect the most urgent needs. And our feeling is that the announcements that have been made since the election are only targeting people who are trying to access home ownership, and we're forgetting all the other families that are very numerous, 1.2 in the country before the pandemic, and they have critical housing needs. For these people are not being helped by the new programs. They cannot access property with income that's under $25,000 a year. Also, when we help people access home ownership, it's not so simple. There's a domino effect. For example, if someone buys a duplex, then they will evict renters who didn't have any problems, and now they do. So it's like a housing rental issue. Madame Raza.
Raised this issue about the new buyers, the first-time buyers of a house having difficulty in buying, and do you think that this new measure to help them would help?
Yeah, I'm honestly not particularly familiar with this measure, so I could get back to you. But what I will say is that what we've heard from our partners over and over again is that it's not just going to be one program that's going to solve this issue. It's the financialization of housing. It's the way that our system operates. Like we're not regulating the ability for folks to still drive the market with profit-driven interests. So even if a few folks are benefiting from these programs en masse, we have a whole generation of Gen Z and millennials who, if I've looked at surveys, that like almost 50% of them have given up on the dream of home ownership. So this program is not going to address this crisis that is also upcoming. And so I think there's a lot more to be done to meet people's
needs. As you said, it's a multi-angle issues. Thank you, Mr. Chair.
Thank you. That's the time. Yeah, and we are moving to the block. And Monsieur Trudel for 2.5 minutes.
Mr. Trudel. Thank you, Mr. Chair. I would like to respond to Madame Chatel. She was talking about the first-time home buyers incentive. I mean, that's a real nightmare. We announced millions of dollars, but the criteria are much too restrictive. So this fund was not used. I don't remember how many $1 million were earmarked, but only 10 or 12% of all of the money over 10 years was used within 3 years. So the criteria are too restrictive. They have to be examined again. And that's not the main issue that we're experiencing right now. We're running out of time, and I always say it in the House, we run out of time when we're talking about really important issues. So it's crazy. If we stopped everything today, like we said 2.5 years ago, that we were going to inject $400 billion into the system for a healthcare crisis, we would have said that's crazy. But we did do it because we had a major crisis. So here, we're having a major housing crisis. There's not enough housing for vulnerable people, and that's what we're faced with now. So what the Bloc is saying is that take the money that is for quote-unquote affordable housing and inject it in the system for people who are building housing that that meets people's needs. Can Madame Laflamme answer? Well, this is one of the requests that has been made by municipalities. If I'm not mistaken, the Canadian Federation of Municipalities has made this request to have an acquisition fund. This way they could buy buildings, buy housing that's on the private market that is currently affordable enough, and to protect them from speculation, get them out of the private market, and then make them available to nonprofit organizations, cooperatives, and public housing. But I don't think that this fund has been launched yet, and I think it would meet very important needs. But it's important to make sure that we dedicate this fund to housing that is outside of the private market, and this can help us stop financializing the housing sector, and it would allow people to get a hold of housing that can put the right to housing in the middle of our work. But we would have to invest significant funds so that we can have a fast effect. There are municipalities in Quebec that have started doing this, some municipalities that are smaller, but also Montreal. But without the funding from the federal government, they can't have the impact that they would like to have. We should be protecting hundreds of units, and we're seeing the disintegration of the accessible market that's available for renters now, average rental households. So when we ask people to take all of the funds that's dedicated to affordable housing and move it to out of the private market sector, we would do better. Thank you.
We are moving to the NDP and Mr. Blakey for 2.5 minutes.
Thank you very much. Ms. Raza, I know you had mentioned earlier in your testimony the idea of having tax measures that would essentially pile up, for lack of a better word, as people own multiple properties. I know in New Zealand, it's not strictly speaking a tax measure, but they've required that people purchasing second, third, and fourth properties pay an escalating percentage of the value of the property as a down payment in order to try and dissuade people from owning multiple properties. I'm just wondering if you want to speak a little bit more to that issue, both the types of taxation you were proposing in your own testimony and the initiative in New Zealand to try and, I think, accomplish a similar effect, but through the amount of down payment required.
Mm-hmm. Yeah, and New Zealand is definitely an example that a lot of international human rights experts tend to draw on. It's a good one. What I am proposing is, frankly, any sort of disincentivizing action that would stop people from wanting to park their capital in additional investment properties. I think an incremental tax makes sense. And frankly, I've been reading tons of articles of folks who own multiple properties who they themselves say that they should be taxed and there should be more regulation. And they're just, utilizing a market that has made it easy for them to accrue huge amounts of profit very quickly by, leveraging their previous equity and then reinvesting it. And so I think this is an obvious space, if we genuinely believe in the human right to housing, to intervene in some way. It could be taxes, it could be some other sort of regulatory measures. But if we truly want every Canadian to have access to housing, we cannot just let a few people, hoard wealth and hoard property. So whether that's a tax or something else, it's up to you folks. But
thank you. Mm-hmm. Chair, how am I doing for time in my 2.5?
You got half a minute. Yeah, a little more. Yeah.
Fair enough. It's not a ton of time, but I might just maybe try and lay some foundation for my next question, which is going to have to do with the question of nonprofits, cooperatives, other folks trying to build effectively non-market housing, having a really hard time competing, snatching up land and buildings as they become available. I think one of the real virtues of the National Housing Strategy, the former National Housing Strategy in its heyday prior to the mid-90s, was that the regularity of funding allowed organizations to plan. They knew that there was going to be funding available every year, so they could hope to acquire land and then plan what they were going to build on it, as opposed to having a spot land available and then come up with a plan and figure out how to fund it all on a very tight timeline. And so I do want to speak a little bit to that ask some questions about that in the next round, Mr. Chair, recognizing that I've elapsed the current round. Yeah. Thank you.
Thank you, Mr. Blakey. And we're moving to the Conservatives and Mr. Chambers for 5 minutes.
Thank you very much, Mr. Chair. Mr. Perreault, thanks for being here today, and thank you to all of our witnesses, of course. You mentioned in your opening statement about inflation expectations and the Bank of Canada itself in October, a monetary policy statement. It said its risk to the inflation outlook included increased inflation expectations on behalf of businesses and consumers, as well as more persistent wage inflation. Just last week, in the bank's own outlook survey with businesses, 2/3 of businesses expect inflation to be over 3% the next year. 80% of businesses expect wages to be higher over the next 12 months. Are we not, thinking about inflation and expectations? We're kind of past this supply chain transitory narrative. Do you have any other observations on this point?
No, I mean, I think quite honestly, I think people are a little bit spooked about inflation, and whether that's because there's supply chain issues last year or weather effects or whatever it is, combination of all these things, the reality is that folks and households and businesses are starting to build that into their view of inflation in the next couple of years. And that's the expectations channel. That's what central banks try to keep in check, because it makes their job more harder to fight against that than if they're just kind of dealing with traditional economic things. And so there's no question inflation expectations are going up, and that's making policymakers' jobs much harder than it otherwise would be.
Right, thank you. So, and inflation expectations take hold, and that it always has a self-fulfilling prophecy, if you will. Government revenues are also impacted by inflation. Can you walk me through how that would work, say, for the federal government?
Yeah, I mean, so quite simply, and for all levels of government, revenue is collected on the basis of nominal income. And nominal income is basically real economic activity plus a measure of inflation. In the case of the national economy, GDP deflator. So when nominal GDP rises more rapidly, government revenues, as a result, rise significantly more rapidly as well. So there is this, in some sense, if you want to call it beneficial impact on public finances of higher inflation, so long as interest rates don't go up in consequence, that as inflation picks up, money pours in. And we've seen that affect almost every province this year.
So thank you very much. So very simply, inflation can increase government revenues. I won't put words in your mouth, but perhaps I'll make it a point to say, the government has been slow to recognize inflation as a problem. Perhaps it's because it's been increasing the revenues over the last year and potentially going forward. Final question for now. Given where we are now, you also mentioned in your opening about kind of this interesting situation where we had a high unemployment, but rates and transfers to persons increased. Where we're at with inflation and deficits, is it possible that the government overshot a little bit on the stimulus side?
I think it's pretty clear now that governments around the world overshot, including our own. Now, it was a game time decision. I understand that. There was a decision, like it was staring at the abyss, didn't know what to do. So the easy thing was to, err on the side of caution. So err on the side of doing more. With hindsight, I think it's pretty easy to say that we did too much. That part of the fact that we are in the situation now with inflation is that reflects that, again, collectively, governments around the world just all erred on the side of caution, all probably did more than what was required.
Thank you. One final question, if I do have time, Mr. Chair.
You have a minute.
Yep. Oh, thank you. Wonderful. Mr. Hayter, we've spent a lot of the time today talking about supply, lack of supply. Governments also, including currently, has a few proposals dealing with demand. They have a first-time home buyers incentive that we would like to, or that the government's proposing to double. They have a new tax-free savings account proposal for home buyers. We have an incentivized structure where the government actually becomes a part equity owner in a home. All of these things actually affect the ability and provide more funds, frankly, to people to purchase homes. Are these wise ideas?
In the absence of significant increase in housing supply, such measures will contribute to the inflationary pressure on housing prices, as it encourages borrowers to borrow more or facilitate their borrowing. So it would have an inflationary pressure.
Thank you. So it will make things worse. Thank you very much, Mr. Chair.
Thank you, Mr. Chambers. We are moving to the Liberals and Mr. McDonald for 5 minutes.
Thank you, Chair. I just wanted to go back there. Mr. Moranis made a comment there just relevant to land. And I know presently there's $202 million through the National Housing Strategy Initiative to transfer surplus federal lands and buildings. So I just wanted to make sure we have that on the record. And also, just on the co-op housing, there's $118 million going to co-op housing to ease rental costs. So I think, we're moving in a direction, and along with all the advocacy that we're hearing on here today, we're moving in the right direction. I think the other thing of this is obviously one size does not fit all. Housing remedies, and we've seen it from obviously comments made by the Alberta member. But I want to ask Mr. Moranis if he could, or has any specific proposals he could suggest on relative to how we entwine municipal and provincial governments to ensure that we're maximizing their cooperation and collaboration?
But that's a very, very difficult question to answer. Unless there's some way to force the three levels of government to work together on housing, and I'm not a politician, I'm not a lawyer. The only way because you've got different parties are controlling different provinces, and it's got to be nonpartisan. There's got to be some effort made in a nonpartisan way to deal with housing and affordable housing and social housing and the supply problems and the trading problems, that everyone is forced to come together. And how that is done, I don't have the answer, but that's the only direction and result that will solve this problem.
Thank you. I'm a former MLA in Prince Edward Island, and I remember housing has been an issue for a number of years with the growth of immigration and our population density, and it is tough. I can tell you, I know that as a former government, we bought an apartment building that was going to be converted into a hotel and turned it over to the Canadian Mental Health Association. I do feel that if there's a will with cooperation and collaboration, a lot can get done. But I want to go to Ms. Raza now, and how much responsibility relative to housing should be placed on the municipalities and provincial governments? So I guess in your advocacy, what barriers or impediments have you seen through your province of Quebec that maybe we could learn from?
So I'm not from Quebec, but I can speak to the interjurisdictional element because that's something that we bump against often when we're talking about human rights. Canada has made this commitment, but actually every level of government has the same human rights commitments. And so we need all levels to come to the table. And I think there is opportunity to use the bilateral agreements, for example, between different levels of governments to enforce certain criteria for the types of housing they build and so on. There are also these housing action plans that each province and territory are meant to develop. So we could use our national leadership to encourage better use of those to build the kind of housing and invest the way that we need. So to me, I think the barriers are just maybe a lack of coming to the table together and maybe a lack of national leadership in terms of ensuring that every level of government is upholding those same human rights commitments that the federal government has made. But you may have also wanted to pass this on to Veronique to speak to Quebec, so I can pass it to her now.
Mm-hmm. Thank you. Mm-hmm. That would be great if she could respond.
If I understood the question correctly, the role and responsibility of cities. And this is a great question because cities are considered like a close government, but they don't have the same financial means than other orders of government, like provincial and federal governments. In Quebec, we also have a debate on the finances of cities that depend on property taxes. So this brings us back to the issues that affect the populations we're talking about today. They have a role to play, but they can create their own programs when higher orders of government don't do so. Montreal has done it in the past, but we can't rely first on cities to create programs. They don't have such great means. And that's why we're talking about the role of the federal government, which in the past played a major role by funding thousands of social housing units per year. In Quebec, we've seen years where there were 8,000 a year. Currently, we're talking about less than 1,500 social housing units that are available each year. So this is at the heart of this shortage of social housing. It's the withdrawal from the federal government. So now cities are at the front and they're asking for more funds to respond to their population's needs because they have a front row seat to the difficulties that are experienced by their citizens who are not appropriately housed, and they can't even feed themselves because of the rents. So we have to help them. Provinces also have a role to play, but Ottawa should also give them the means to make sure that these financial resources are allocated for the most urgent needs and that they fund programs that are structuring. If they can't sustain themselves, the cities will be responsible to fix the medium-term problems. And this is why we have to think about the programs that we're funding. We have to make sure that they will respond to needs and that they'll be affordable on the long term.
Merci, Madame Laflamme.
Thank you, Madame Laflamme.
Donald, members, we are moving into our fifth round. I am looking at the time, and as we've done in previous sessions, we won't have enough time to do a regular fifth round. So I have divvied up the minutes between the different parties. So I've got 7 minutes for the Conservatives, then 7 for the Liberals, 3.5 for the Bloc, and 3.5 for the NDP. And we're going to start with the Conservatives, and we have Mr. Stewart for the 7 minutes.
Sorry, is it 7 minutes?
Yes, 7 minutes.
Okay, I'll be taking Mr. Stewart's position. He had to step out of the meeting. Thank you very much,
Mr.
Chairman.
Poilievre for 7 minutes.
Yes, Mr. Baker said he was going to take issue with some of my facts, but then he didn't contradict any of them. He simply brought in different facts, and he brought to my attention, the Liberal member, the UBS Global Real Estate report, and pointed to it as an example of high housing inflation in Switzerland. So I wanted to know what they said. This same report, which Mr. Baker cites with such authority, says about Canada. And I have it right here from October 2021. Quote, in 2019, another housing frenzy developed as buyers took advantage of declining mortgage rates. Imbalances and index scores have increased accordingly. Toronto ranks second, that's in the world, among all analyzed cities, and Vancouver has returned to bubble risk territory. He also said that I shouldn't have mentioned that Singapore has lower inflation than Canada. Well, it turns out they do. By Mr. Baker's own admission, inflation in Singapore is 4%, whereas in Canada it's 4.8%. Now, if this supply chain explanation for high inflation made any sense, you would think Singapore, which is the most supply chain dependent nation on earth, would have higher inflation than us. They have about a trade to GDP ratio about 2 or 3 times higher than us. They have to import basically everything in Singapore, including fresh drinking water. And yet somehow they've kept their inflation lower than Canada's. There is actually a fairly close correlation between inflation rates and money supply increases in the G20. It's close to a 1-for-1 correlation in November. So the more countries print money, the higher their inflation is. And so I'd like to turn to Mr. Perreault. You mentioned that inflation, that the government spent too much during the pandemic, in retrospect. So let's look forward then. If the government pursues a policy of persistently high deficits, all other things being equal, would that put upward pressure on inflation versus the inflation we would have absent those persistently high deficits?
Yep.
Well, that's a pretty clear answer. We're not used to getting such unequivocal responses as that.
I can equivocate if you want, but
no. They say that economists have 2 hands for a reason, because they like to say on the one hand this and on the other hand that. But no, you were very direct, and it makes sense. When you have more dollars chasing fewer goods, it drives up prices. Mr. Moranis, in the year leading up to fall 2021, there was a $200 billion or 80% increase in the dollar volume of housing purchases. So the dollar volume went from the normal $250 billion per year to suddenly, out of nowhere, $450 billion. Now, this was during a time period where the economy was actually weak. It was still smaller than the GDP was still smaller than it had been in 2019. Real wages were down. Immigration was down. So all of the things that normally drive inflation were actually down, and yet somewhere we got $200 billion extra dollars to spend on real estate. Now, put aside the debate about the underlying causes for Canada's high real estate prices for a moment. We all agree, though, that money did transact. It actually did. People did move money from one account from the buyer account to the seller's account. So $200 extra billion found its way into housing. From whence did that money magically appear?
I'm going to defer to Professor Hyder to help me with this answer. Murtaza?
Thank you. Unlike coffee that you buy on cash or groceries, housing purchases are financed by debt, and the residential mortgages constitute the largest segment of household debt that we have. So if there is additional money that you see, it's most likely the money that is borrowed for the purchase of housing.
So it was debt. Okay, now let's follow back a little further. Reverse engineer this now. We realize that the buyers got it by borrowing it, and but everything comes from somewhere. So where did the banking system suddenly get an extra $200 billion that it could lend out for 5-year periods? Can't have come from deposits, because those, of course, are short-term, and even short-term bursts in deposits can't be relied on for long-term loans. But where would that $200 billion have come from?
I would defer to Mr. Perot, who's the chief economist of a bank. He would know where that money came from.
I may be the chief economist, but I'm not the treasurer. Listen, so it comes from a number of sources, right? Banks borrow just like everybody else. We borrow deposits, which have risen a tremendous amount during the pandemic. So both personal and non-personal deposits are up several $100 billion. We borrow in credit markets, and we use some of our own funds, and that's generally speaking how that activity is financed.
Right, but given that the GDP was smaller, and that money really represents the underlying goods and services in the economy, and we were producing less of those goods and services, and given that you already lend out your basic $250 billion for mortgages, where did the extra $200 billion come from? Because that's the mystery. It's not a mystery that you would have the normal funds that banks have on a given year from their deposits, but there was an extra $200 billion that seemed to appear and lead to inflating housing prices.
Yeah, I'm sorry. I'm not 100% sure what you're getting at, and I'm not familiar enough with the bank's financing operations to be able to give you the right answer in conjunction with that. Apologize.
Well, thank you. If I could conclude, thank you, Mr. Chair. It's just that the massive increase in lending appeared right after the Bank of Canada began its money printing quantitative easing program, and the house prices began rising right after that occurred as well. Would that be a coincidence?
Thank you, Mr. Poilievre. That's your time. We are moving now to the Liberals and Ms. Zarowitz for 7 minutes.
Thank you so much, Mr. Chair. I'm going to focus a little bit more on solutions. The first question goes to Mr. Moranis. Mr. Moranis, we have announced a $4 billion housing accelerator fund. So the idea is our goal is to build 100,000 middle-class homes by 2025. That's in addition to everything else we've announced over the last few years. What we're trying to do is we want the money to go to cities that are going to build more than what cities have historically sort of planned. That's going to add, that's going to minimize approvals, that's going to tackle NIMBYism, and that's going to establish inclusionary zoning. So how can it be designed to remove barriers to municipalities who want to create more housing stock more quickly? So if you could give us, how do we sort of design this fund so that we could sort of get it to work right away?
Well, let me refer to a couple things, and I'll start with the answer, and then I'm going to turn it over to Murtaza. In 2014 and 2015, there was a pilot project in Ontario where when developers bring in sort of proposed redevelopments, they have their architects, they have their engineers sort of with their stamps approving and recommendations. The municipalities put in a pilot project, which sort of was there and gone very quickly, that they would take their engineers and architects stamps as long as they got insurance and not redo that work by municipal engineers and architects. So there's been a complete sort of bottleneck in the approval process at the municipal level. Right now in Ontario, it used to be Tarion gave a home builder warranty. They've now, as of February 21, it's called HCRA license required, and this can delay builders up to another 9 months to a year. So everyone is sort of trying to protect themselves, and you've got these delays. There's no simple solution because you've got 3 levels of government autonomously and independently operating, and it's an incredible bottleneck and roadblock. Murtaza, help me with the end of this answer, please.
Thank you. If I may, the challenge here is that the public anger is directed at the federal government and not at the local municipal governments. There is no Canadian housing market. They're all local housing markets, and your neighborhood's prices goes up and down. And the NIMBYism that is local, that people's reluctance and resistance to new development in your own neighborhoods, that is the root cause. And then we know NIMBY, not in my backyard. There's also a thing called NIMTO, not in my term of office. And that is what happens with local governments when local councillors realize that their electorate is resisting new construction. So they say, it's a great plan to have a new building, but not in my term of office. So put NIMBYs and NIMTOs together and you are in this situation. The challenge could only be resolved if the federal government and provincial governments, because municipalities are creatures of the provinces, take a bigger role in land development approval processes. Federal governments and provincial governments are taking all the blame for housing prices. If that is the case, then they should take a bigger role, ask for a bigger role in land development processes to get rid of the bottlenecks that are creating this humongous challenge of not building enough houses.
Well, thank you. I mean, that's very helpful to both of you, just because we are trying to get to some solutions on how do we design this program so it's most effective. And maybe, Professor Hayter, I'm going to continue with you. I know we started talking a little bit about blind bidding. Can you maybe talk about how, maybe the government's proposed ban on blind bidding, what impact will that have on the housing market? Do you think it'll be a positive impact?
There are two ways of looking at it. One is the element of fairness. And I think that blind bidding, addressing blind bidding will improve fairness because the real estate industry owes fairness both to sellers and to buyers. As far as its impact on housing prices, I'm afraid it would have a limited impact, if any, on the overall housing prices nationally. It may have a local impact, but that impact would not aggregate into a bigger noticeable impact on housing prices Canada-wide. But the principle of fairness is at play here. And for that purpose, I think blind bidding has to be structured in a different way.
Mm-hmm. So you do support our ban on blind bidding, and you think that's a positive development moving forward?
I'm not in favor of criminalizing it. I'm in favor of having stakeholders come together and address it and look at the implications of continuing with it and coming up with the way to address it. I'm in favor of eliminating it or reducing it, but not for criminalizing it.
Okay, that's great. And I'm not sure how, maybe who to sort of address this one to. I'm not sure if it's you, Mr. Perreault, but one of the things, and I think everybody knows this, I wonder if we also need to have a little bit of a shift in thinking as well within the marketplace. And I'm not quite sure how we go about doing it. We do see a lot of people invest in buying property just for an investment purposes. We see many people use their homes or condos as RRSP, so a way for them to actually save for retirement. And I think that there's a big bias within our country that we have to buy homes versus finding affordable places to live over a certain period of time. Do you think that we need to have some sort of a shift in thinking around housing? And is that something you think that we should also be thinking about as we're moving forward on how to ensure that everybody has a safe, accessible, affordable place to live moving forward? Mr. Perreault, maybe start with you and then see if anyone else wants to respond to that.
Sure. Thanks for that question. Yeah, 100%. I totally agree. I mean, when we look at, say, home ownership rates in Canada relative to other countries, we are on the high end of things, particularly when you compare that to more expensive places to live. So I think for whatever reason, we have this mentality, this desire to own homes. Now, one of the reasons that may be the case is there is a tax advantage from owning a home versus renting, right? You're accumulating assets in a sheltered tax environment. So there is a financial incentive to want to own over renting, which is undeniable as well. Now, you can get around that by, thinking about the tax code, and I wouldn't be in favor of changing kind of the treatment of owned homes, but you can think about, tax advantages to renters that try and equilibrate the home owning versus rental decision, because that is, in my mind, we are going to go into that world. I mean, the simple reality is that people are being priced out of owning a place, but they've got to stay somewhere, so they're going to have to rent.
Thank you so much.
Thank you. And thank you, Ms. Zarowitz. And that's the time. And we are moving to the block and Monsieur Trudel for about 3+ minutes.
Oui, merci.
Thank you, Mr. Chair. I'm a little shocked to be hearing my conservative colleagues being obsessed with the inflation rates, 4 point this, 5 point whatever. Meanwhile, there are people in Montreal who are dying in the cold because we weren't able to find them a home in 30 years. And that's all federal governments combined. It's fascinating. People are literally dying. There's a woman who died a few days ago because she couldn't find a home. There's an encampment here on Notre Dame. There are people that are homeless and they don't want to go to shelters and they can't access housing because there's no affordable housing. But we're obsessed with this statistic when there are real people who are dying right now in the cold because we can't do our job. Frankly, it's fascinating. So, Madame Laflamme, I would like to ask you again. Because of the withdrawal of federal investments, Quebec has developed a social community approach to homelessness. So a person who's homeless, yes, they need a home, but you can't ask them how to make a budget, how to pay for their cable, how to do groceries. They need emotional support. And they end up back in the streets after a few months. So we need to fund programs. So, Madame Laflamme, can you tell us how important it is to support the community organizations on top of the bricks and mortar housing? Answer, yes. Thank you for talking about this person who was experiencing homelessness that died. There are some in Montreal, in Toronto, but also elsewhere. Indeed, it really showcases the failure of our social policies. It also shows us that the right to housing is also connected to the right to health and to dignity and others. These are rights that Canada has committed to respecting. So adequate housing needs to be integrated in federal policies. So a global community approach to fighting homelessness in Quebec is based on community supports. And this is something we're seeing elsewhere in Canada. So we're looking for social housing with community support. So in the housing developments that are funded, there is community support that can help these people who are vulnerable, for people who are coming out of homelessness. It's also about prevention. A holistic approach to fighting homelessness is not just about social housing and community support, but it's also recognizing the necessity of prevention in their approach. And that's why it's so important. We have to recognize the connection between health, security, physical and mental well-being. There's a diversity of needs that are felt by people who are experiencing homelessness. And we need to recognize these people. They're often overlooked. They're often young. They're women.
Thank you, Monsieur Trudel. That is the time. We are moving to our last questioner, and Mr. Blakey, I know you teed up your last question. You are the last questioner, and the floor is yours.
Well, thank you very much. So I might just ask Ms. Raza, I was speaking earlier about the utility of a fund that might help cooperatives and nonprofits be able, because they're in such a reactive position, the way the current national housing strategy works, if a fund that would help them be able to acquire land and buildings more quickly as they come onto the market, how that might work and what effect it might have on the ability of those organizations to build new social housing.
Yeah, that would be incredibly important. I'm going to pass this question on to Veronique in a moment, but can I just address an earlier question that came up about, we were talking about how we need a change of mindset where we don't just need to think about home ownership and so on. I agree to a certain extent, but we can't just talk about mindset without thinking about how to actually offer renters and other folks security of tenure. Because, for example, we know that seniors are some of the most impacted by homelessness, inadequate housing, evictions, and so on. So it's all well and good to say, oh, just rent. We don't need home ownership. But then what do you do when the income sources stop and pensions are not very strong for most folks across Canada? If home ownership is their retirement plan, we need to think about, other issues like that. But anyway, I will pass this to Veronique to speak to the social housing question that Daniel raised.
To make it quickly, about acquisition, we need to have funds that is dedicated to purchasing land and buildings for municipal housing offices or nonprofit organizations. This is an important component that can help us complete social and community housing offerings that are insufficient currently. This would allow them to purchase rental buildings that are for sale. In Quebec, cities have developed acquisition funds like Quebec City and Montreal. They have funds dedicated to buying lands that they can then grant to nonprofit organizations. This is how cities are intervening. But to do this, they need to have assurance that higher orders of government will help them fund this type of initiative. So a complementary fund dedicated to nonprofit organizations for cities and cooperatives would be something that would be very welcome. And this is another way that we could intervene to complete this supply. Madame Châtel was talking earlier about the fund that was announced. If this is the Accelerated Housing Fund, we don't know the details about it. There are currently consultations going on. One of the things that we're hearing out of these consultations is that this fund, instead of looking for innovation, should be spent on programs that work and that are already in place that help with social and public housing.
Well, thank you so much, Mr. Blakey. That is our time. Great question, and I just want to thank our witnesses so much for informing this committee with all your expertise on housing. On behalf of the committee members, the staff, the clerk, the interpreters, everybody that makes this happen. We really appreciate you coming before us and informing us for our report on inflation in the current Canadian economy and with the focus today on housing. Thank you. And on that, members, we'll adjourn this meeting. Thank you, everyone.
Thanks, Mr. Chair.
Thank you.
Thank you, Mr. Chair. Thank you, witnesses.
Thanks.